Good evening, my dear students. Welcome to the session on the CA final indirect tax input tax credit chapter. Hope all of you, as I've told you before in the previous class, have gone through the provisions. So we have covered all the theory related topic, all the theory related subject for the input tax credit chapter. So now what we are going to do is solving a few problems based on all the provisions what we have discussed. And before we go to the problems, I wanted to first take you on a quick revision of the chapter because we have that some extra amount of time also left. So I thought we'll first run through each of the provisions. In case of any queries what you have in this particular chapter which you have not asked in the previous sessions, feel free to ask them now also so that we can look at those also. So we'll just go through the entire chapter of input tax credit on a revision basis, post which we will work out the problems. Good evening, Namrata. Yeah. So therefore, as you all know, what the main input tax credit is, the concept of input tax credit is whatever taxes what you pay on the business related expenses and the capital goods, you can adjust it against the output GST liability. So that is your input tax credit. The main important reason for which the ITC came into the picture was the deficiencies in the previous system. As I explained you at that initially, input of service tax could not be adjusted against the value added tax. Similarly, input of value added tax could not be adjusted against the service tax. So there were a lot of deficiencies in the system. Also, the state taxes were not available to be adjusted and set off against the central taxes and vice versa. And GST promises seamless flow of credit. The scheme is designed in such a way to avoid the cascading effect of taxation. What is cascading effect? Is the tax on tax. That is, in case you're paying a tax, you have to claim the credit of credit. Cascading effect earlier, service tax component used to get added to the VAT component because the credit was not available. So due to which the set off was not available at that point of time. So again, inputs are available on all the inputs, input services and capital goods. Exception is blocked credit, which is covered under 17 subsection 5. One-to-one correlation is not required with regard to GST. And also ITC is availed on the payment of tax on taxable output supply. So in case your output supply is taxable, then only the credit will be available to you. In case the output supply is exempt, you will not get the input tax credit. What is the, however, the exemption is the zero rated supply. I hope all of you recollect what is the zero rated supply. It is a supply wherein export of goods and services and supplies to a special economic zone, wherein the amount of consideration is received in the foreign currency. That will come here. And also chapter 5 of the CGST 16 to 21 and rule 36 to 45 prescribe the provisions relating to input tax credit. State GST law also prescribes the identical provisions with regard to the GST. Fine. That is the one. So zero rated supply, this was what it is. We had covered in the exemption details at that point of time. Right. So then you also look at, so therefore in case of both taxable and exempt supply is being made, then exclusively whichever is used for the taxable supply, he could claim the input tax credit, and whichever is used exclusively for exempt supply, the input tax credit will not available. So whenever input is used for both the taxable and the exempt supply, in that particular situation, what happens? Proportionate credit attributable will be available. How to calculate the proportionate credit? Rule 42 and 43 have been clearly given. Also job work, also we have seen in the previous session, job work inputs have to be brought back from the job worker's premises within 1 year, and for capital goods it has to be brought back within 3 years. In that particular situation, input is available, need not reverse the respective input tax credit. And also input service distributor concept also we covered, wherein an input service distributor is appointed and a separate registration is to be taken, and whatever credit is available to the head office is passed on to the respective branches by way of the transfer of the input tax credit. Then some important definitions also we had gone through after that. Good evening, Tirupati. Good evening, Sriram. And what are the definitions? Capital goods, very simple, whichever is capitalized in the books of accounts and claiming the input tax credit. Input is what? other than the capital goods used or intended to be used by the supplier in the course or furtherance of the business. Input service, again, it is similar to a service which is used or intended to be used. Input service distributor definition we have seen. It is an office of the supplier which issues the invoices under 31 towards prescribed document for distributing the credit. This is nothing but the input service distributor. What all comes under input tax? This is very, very important. In one problem in the last session we saw, when you calculate the input tax credit and some reverse charge items are given in the question, all the taxes which are paid under the reverse charge basis also has to be taken in the definition of this respective input tax. So input tax is basically the IGST charged on the import of goods. Okay, IGST charge on the import of goods has to be taken. Tax payable under 9.3 and 9.4. What is 9.3 and 9.4? We saw in charge of GST chapter. And 5.3 and 5.4, similarly the IGST provisions, nothing but the reverse charge mechanism that is also covered, does not include the tax paid under the composition levy. So therefore, whatever tax you have paid under the composition scheme, in that particular situation, it will not include the respective tax. So that is not an input tax. Why it is not an input tax? Because you will not get the claim of the input tax credit. Very, very important and easy to understand. Then input tax credit is credit of input tax. Simple definition, invoice definition, section 31. You would have seen in time of supply chapter where the section 31 would have been covered. What is the invoice at that point of time? Also, you will see in the subsequent chapter, accounts and records. In there, you will also see what exactly do you mean by the term invoice and what are the items which are to be mentioned in the tax invoice. Fine. Then inward supply shall mean the receipt of goods, whether by purchase or acquisition. Simple definition. Job work we have also already seen in the last session. Okay. Manufacture, processing of raw material. Important character of manufacture is a new product gets emerged with a distinct name, character and use. Motor vehicle, not very important from examination point of view. Please, however, still for a generic understanding, you can go through that section 228 of Motor Vehicles Act 1988. Non-resident taxable person means occasionally undertakes the supply of goods or services, whether as principal or agent, who has no fixed place of business or residence in India. That is an important characteristic of a non-resident taxable person, that he does not have any fixed place of business or residence in India. The non-taxable supply means supply which is not leviable to tax. Very straightforward definition. Output tax means tax chargeable on the taxable supply of goods, but excludes the tax paid by him on the reverse charge basis. That is, in case a person supplies the goods or services and he charges the tax from his customer, that comes under the output tax. But if the same person pays the tax on the reverse charge basis, in that particular situation, that tax is excluded. Then similarly, outward supply means the supply of goods or services, whether by sale, transfer, barter, exchange, license, rental, made or agreed to be made by the person in the course of the business. That is your outward supply. This is your zero rated supply benefit. It is nothing but export of goods or services or both, or supply of goods or services or both to a special economic zone developer or a special economic zone unit. Fine. 16 subsection 1 therefore gives the eligibility and conditions for claiming the input tax credit. Sir, if possible, please discuss the 2 or 3 attempts question papers. It is pretty much everything is covered in the material, what is there. But the previous attempts also we will look at it. That's not an issue. But all those are pretty much covered. Similar questions have only been asked, which have been added. Last few attempts also definitely will try to cover. You don't worry, Sriram. You will be having separate problem solving sessions post 15th of May, wherein you will be covered all the respective problems other than what is given in the study material, wherein all problems given in the previous exam papers, in the revision test papers, all these questions will be covered post 15th in separate problem solving sessions, because now our emphasis is mainly to understand the concept of the input tax credit. Fine, that once you understand the concepts and you gain the confidence of solving the problems, that is why the Board of Studies has planned the problem solving sessions post the 15th of March, and hopefully I'll also be taking some problem solving sessions on whatever chapters I have covered. So don't worry about it. A lot of problems will be covered, and you'll get a thorough understanding for the respective examination. Good evening, Viraj. So therefore, the important point from your angle when you're studying for indirect taxes, you need to aim for the highest possible marks, because this is one subject which will make sure that you clear your group 2 examinations easily, because it is a very scoring subject. Why is the reason it is a scoring subject? Because it does not have much of litigation till now, because it is a new law. It was just came in 2017. So therefore, just 6 years, you don't have much litigation. That is, you don't have much of case laws related stuff. So the questions can be asked only based on the provisions, and the provisions we are very discussing. And since this is a new law, the provisions are very simplified, because income tax law is basically a 70-year-old law. So therefore, over a period of 70 years, lot of changes would have been done. Lot of litigation is there. So therefore, direct taxes as such is a bit more complicated than indirect tax laws. So that is why you have to focus more on the indirect tax laws, because it is a subject which is very supremely scoring. It is a I myself have seen a lot of students who come to me with their mark sheets. Everyone seemed to have got minimum 60 marks in the indirect tax laws subject. So therefore, it is a very scoring subject. Make use of the subject, because you are very lucky that you are writing the indirect tax laws just 6 years after the law has come. So till 10 to 20 years, that is till 2037 year, the GST law can never get complicated from examination point of view. GST law is definitely complicated from a practical perspective. For the businessmen, for following the respective provisions, etc., it is complicated. But for the students, when your preparation for the exam, this is something which is very scoring. So make use of that. Make use of the luck factor, because I myself have written my exams in the year 2011 and 2012. At that point of time, you won't believe, in excise we had 3 subjects: central excise duty, service tax, and VAT. Excise duty had what's a separate chapter on manufacture. That particular chapter itself, the size of the chapter in the study material was 140 to 150 pages, just one particular chapter, and it had close to 250 case laws, and you never know which case law can be asked in the examination. What were the case laws, whether a process amounted to manufacture or not, because the manufacture was a taxable event for excise duty. So on this itself, we had close to 200 to 250 case laws. So at least you don't have that. So this is precisely why the indirect tax laws is a very scoring subject at this juncture. So please take advantage of that fact and make sure that you get very good marks. Going forward, 16.1, as I told you, mentions the eligibility and conditions. Subject to the conditions, restrictions, manner specified in 49, which we discussed, he can claim any input tax credit on supply of goods and services intended to be used in course or furtherance of the business. So on supply of goods and services, which is used for the course or furtherance of the business, input tax credit can be taken. Okay. Then the 16 subsection 2, no registered person can claim the input tax credit unless he has a tax invoice in his hands and he has received the goods or services. So he should be having a tax invoice, number 1. He should have received the goods and services, number 2. In these particular cases only, he can claim the respective input tax credit. Then also, the tax has to be paid by the government either through the cash ledger or through the utilization of credit. Both ways you have to file, and you have to furnish the return. So whenever you are getting the goods in lots or installments, the credit can be available only on the receipt of the last law or the installment. Fine. And also there is a provision which says that where the recipient fails to pay to the supplier the amount within a period of 180 days from the date of issue of the invoice, whatever input tax credit you have availed will be added to the output tax liability along with the interest thereon. So along with interest, it will be added to the output tax liability. So where the recipient is entitled to avail the credit of input tax on payment of a good thereon. Fine. We have given an example also where A purchased the goods of 1 lakh at 18%. Date of invoice is 20th March. He claims 18,000. 180 days he has to make the payment. So in that case, once the 180 days elapsed, he has to reverse the credit. Interest has to be paid by Mr. A. Now, these are the most important topics from the examination point of view. That is the addition of 16 subsection 2 clause AA and 16 subsection 2 clause BA. These are the most important things from your examination point of view. So therefore, here what happens? It says that input tax credit is available only if the details of the invoice are furnished in the statement of outward supplies. So if you have to claim the input tax credit, the person from whom you are procuring the goods or services should have filed the input tax credit should have filed the sales in the GSTR1, and that amount has to be visible in the manner which is given under section 37. Clause BA also is added that input tax credit is available only if the details of ITC is communicated. How it is communicated? By virtue of GSTR2B, which is an auto-populated form where it clearly gives the respective amount which is to be displayed. Then another important point, where the registered person has claimed the depreciation, the tax component of cost of capital goods and plant and machinery, whatever ITC is there shall not be allowed. Fine. So therefore, either you claim the depreciation on the tax component of the GC, if you're purchasing machinery on the GST, you either claim the depreciation or you claim the input tax credit, but claiming both will not be allowed. The 16 subsection 4 also is an important amendment which has happened here. In this particular cases, it shall not be entitled to take input tax credit in respect of any input or credit note for supply of goods or services after the 30th day of November following the end of the financial year, to which the invoice or debit note or relevant annual return furnishing, whichever is earlier. I hope these amendments also you have seen. Let me take you for 1 minute to, because though I have covered everything here, let me also take you to the supplementary study paper for 1 moment, where if you see the respective amendments which have been taken. So I hope all of you have your supplementary study paper. Very, very important. From the supplementary study paper itself, you can easily expect around 25 to 30 marks, 25 to 30, if not more. 25 to 30 marks will be easily available with regard to the supplementary study paper, whatever is there. Just give me 1 moment. I'll just share the supplementary paper so that we can go through the respective amendments which are there with regard to the input tax credit. So this is 16.2 and Rule 36.4 amended. This is what we were discussing now. ITC, whatever is there, you can avail only if suppliers have uploaded the relevant invoices or debit notes in the GSTR1 or IFF. What is IFF? Can anyone tell me? I had mentioned when we were doing the topic. Can anyone tell me what is IFF? Without Googling, please. I hope no one is Googling. What is IFF? Anyone? Have you forgotten? IFF is invoice furnishing facility. That is, in case anyone opts for the quarterly filing of return, if you have a turnover of less than 1.5 crores for 1 year, you can opt for the quarterly filing of the GST return. In that case, for him, apart from the GSTR 3B on every quarter, he can file the invoice furnishing facility, wherein he can file the invoices in the IFF every month so that the corresponding customer gets the input tax credit. So therefore, this new law is there. The details of invoice or debit note has to be given and communicated. So therefore, with effect from 1st January 2022, 36 sub rule 4 has been substituted to get affected to the amendment. What are the amendments which are there? No ITC shall be availed in respect of the invoice or debit notes, the details of which are required to be furnished under 37(1), unless it has been clearly indicated in GSTR1 or using the IFF. And the details of the ITC have been communicated to the registered person in form GSTR2B. So in this GSTR2B, you clearly have to give what are the respective input tax credit which is being communicated. I hope you got the point. Okay. Then, so with effect from 1st October 2022, clause BA also has been added, that another new condition, the ITC or both is available to the registered person only if the ITC has been ITC which is communicated has not been restricted. That means it should not be a restricted credit. So even though, if for example, you purchased a motor car, and you have given your GST number to the car dealer. Okay, the car dealer filed the GSTR1 with your registration number, and you can see that in your GSTR2B. Can you claim the credit? You claim the credit. Obviously, you cannot claim the credit. Why you cannot claim the credit? Because it is a restricted credit. It is a restricted credit, so you cannot claim the respective restricted credit. Then amendment of 16 subsection 4, as I told you, the time limit which was there, it is for the financial year extended up to 30th November of the following financial year. So what was the initial rule? The registered person shall not be entitled to take the input tax credit of any invoice or debit note after the due date of furnishing the return under section 39 for the month of September following the end of the financial year, or the furnishing of annual return, whichever is earlier. So due date of furnishing return under 39 means the due date for filing the GSTR 3B for the month of September, which was October 20th. So either October 20th was the date, or the date on which either October 20th was the date, or the date on which it per actual furnishing of relevant annual return happens. Furnishing an annual return or the due date of furnishing the return, whichever is earlier, needs to be taken into consideration. Fine. Then with effect from 1st October 2022, 16 subsection 4 also has been amended. What does it say? It shall not be entitled to take the ITC or both after 30th day of November. So therefore, following the end of the financial year or furnishing the relevant annual return, whichever is earlier. So what does this mean? You can claim up to 30th November following the end of the financial. So therefore, for financial year 2022-23, you can claim the input tax credit up to 30th November or the actual date of furnishing annual return. What is annual return? GSTR 9. That is a summary of all the transactions, GST payables, etc. As the input tax credit is claimed is the annual return. So either of these two, whichever is earlier, can be taken into consideration. Okay. Then date of issuance of debit note to determine the relevant financial year for the purpose of 16 subsection 4. So 16.4 was earlier amended. Okay. In this case, to delink the date of issue of invoice from the date of issuance of underlying invoice. So what is happening here? Here you have to see what is the date of issuance of debit note to determine the relevant financial year. That was the point of discussion. So earlier, what was happening? Earlier, the amendment was happened that the date of issuing of debit note should be totally differentiated from the date of issue of the underlying invoice. So which financial year you have to take? So which of the following dates are to be taken for the financial year? Is it the date of issuance of debit note or date of issuance of underlying invoice? So in this, it is very, very clear. The date of issuance of debit note shall be taken for the relevant financial year for the purpose of 16 subsection 4. So therefore, whenever you are issuing the debit note, that particular date has to be taken for determining the relevant financial year. Example, debit note is raised on 7th July 2021 in respect of original invoice dated 16th March 2020. In that case, the invoice is in 2021. So relevant financial year shall be 2021 for claiming the input tax credit. However, debit note, when it is issued, when some items are not covered in the invoice, you want to cover that as well, you will issue the debit. So debit note is issued on 21-22. In that case, the relevant financial year for the purpose of claiming the credit of the ITC which is given in the debit note will be financial 21-22 as per the amended provisions. I hope you understood this particular concept. Very, very important amendment from the examination point of view. November 30th cutoff date is for inward supply or to file the return? I didn't understand. 30th November cutoff date is for claiming the input tax credit. 30th November cutoff date is for claiming the input tax credit. You have to claim the input tax credit before that particular date. Any clarification? Please let me know. Yeah. Then the next amendment, value of supply of duty credit scrips to be excluded while computing the aggregate value of exempt supply for the purpose of 42 and 43. So what is, first of all, duty credit scrips? We have to understand. And for claiming 42 and 43, they has to be exempted. So For what is 42 and 43? I'm sure all of you know by now what is 42 and 43. 42 is apportionment of credit for input goods and input services, and 43 is apportionment of credit for capital goods. Fine. So explanation 1 has amended to exclude the value of supply of duty credit scrips while computing the aggregate value of exempt supplies. As per amended explanation, aggregate value of exempt supplies has to exclude all of these. If you see, there is an explanation which is given to Rule 43, which we have seen in our previous sessions, which says that when you are calculating the exempt supplies, you have to ignore certain items. You have to exclude certain items. What are those items? First one is value of services by way of accepting deposits, extended loans, or advances where interest or discount. That is in case of fixed deposit interest and all of these things that you should exclude from the exempt supply. Also, supply of services by way of transportation of goods by a vessel from customs station of clearance in India to place outside India, transportation services value of supply, that also exclude from the exempt supply. That also has to be excluded. Then the third one is value of supply of duty credit scrips specified in notification 35/2017 so and so. So this clause D has been inserted with effect from 5th July 2022. Can anyone tell me what do you mean by duty credit scrips? Duty credit scrips. Can anyone tell me what do you mean by duty credit scrips? Anyone? Duty credit scripts. Whatever comes to your mind. What do you mean by that? Duty credit scripts. Anyone? I'll wait for another couple of minutes. No one is answering. I'll tell what you mean by that. What comes to your mind? Have you heard of this something before in your articles or somewhere? So therefore, let me tell you what is that. Basically, whenever an exporter of goods is there, whenever export of goods happens, the government as an incentive, as per an incentive scheme, will provide you certain duty credit scripts, which you can use for the payment of customs duty, or you can even transfer it to some other person for monetary consideration. Therefore, if it's something like if you make an exports of products for around 50 crores in 6 months, I will give you duty credit scripts to the tune of 5% of the turnover. Why is this given? This is like an export incentive. Just like export is zero rated, that is an incentive. This also is a export incentive. So the moment an exporter is there, if he is exporting any particular product on achievement of particular turnover, the government will provide him certain duty credit scripts. What can you do with the duty credit scripts? You can use it for paying the customs duty in case you are importing the product. If you don't have any imports, you can transfer this duty credit scripts to some other person who has to pay the customs duty. And for that, you can charge the monetary consideration for that. So therefore, if I have duty credit scripts, I'm into export of a very particular product, and I'm crossing a threshold of exports for which I'm given these scripts from by the government. I transfer these scripts to some other person, or I have get it from the government. It should not be taken under exempt supply. I transfer it to some other person. In that case also, this should not be taken in exempt supply. I hope this is clear. The next one, availment of ITC not blocked in case of leasing other than leasing of motor vehicles, vessels, and aircraft. What is this? Now, the important point here, what we are going to discuss is with regard to leasing of motor vehicles, vessels, or aircraft, whether the input tax credit is blocked or not. So what does, first of all, 17 subsection 5 provide? It says that the ITC shall not be available in respect of the following supply of the goods or services. ITC will not be available with regard to the following supply of the goods or services. First one, food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, rental, or hiring of motor vehicles, vessel, or aircraft. Referred to in A or AA. What is A or AA? 17 subsection 5, that motor vehicles, that one. Except used for the purposes therein. Okay. Provided that ITC will be available when it is inward supply is used for making outward supply. So here, it very clearly mentioned that leasing here refers only to leasing of motor vehicles, vessels, and aircrafts, and not to any other items. It gives an impression that leasing, renting, it is there. So if you see, it says cosmetic plastic surgery, leasing, comma, renting. So therefore, this gives a feeling, or this gives a view that leasing of everything and renting and hiring of motor vehicles is covered in the block credit. But that is not the intention of the legislature. The intention is to cover leasing, renting, both of motor vehicles, vessels, aircrafts only. So therefore, if you are leasing any other, say, equipment or plant and machinery other than motor vehicles, you can definitely avail the input tax credit. There is no problem whatsoever. I hope this point is clear. Then, now, the proviso which is given after 17 subsection 5b clause 3, it applies to the entire section 75b. Okay, there is a proviso which is given. If you look at that proviso, you will feel that maybe it is applicable only to point number 3 of 17.5b. So if you go to 17 subsection 5b, there are totally 3 items which is there. What are the 3 items? The first one, food and beverages, outdoor catering, beauty treatment, health, cosmetic, leasing, renting, all that is there. Then provided ITC shall be available where inward supply is used for making outward supply as a principal or composite supply. I think till here it is clear. 1 minute. Then membership of club, health and fitness center, and travel benefits extended to employees on vacation. Okay. So here there is a provision which is given. It says that ITC in respect of such goods or services or both shall be available where it is obligatory for the employer to provide the same to the employees under any law for the time being in force. If that provision is there, it clearly means whatever provision is highlighted above is applicable to entire 17 subsection 5 clause B. So therefore 1, 2, and 3, all these 3, this provision is applicable. Fine. It gives an impression as if this provision is applicable only to point number 3, but therefore clarification is given. So therefore the entire 1, 2, and 3, the provision will be covered. Then the next amendment is there are multiple places where the words GSTR2 are referred to in rule number 36.2, 42, and 43. So therefore, since there was an amendment which is done, it is a very, very clear process that rule number 36.2 is now amended to remove the reference to form GSTR2 therefrom. Further, it has been provided details of invoice or debit notes for ITC availment shall be communicated in form GSTR2B. So what all details of debit notes or invoices are there should be communicated in GSTR2B. So therefore, what is the amended 36.2? ITC shall be availed by the registered person only if the applicable particulars are contained in the said document. This entire line after that, GSTR2 is removed. Similarly, 42 and 43 also have removed the GSTR2. The GSTR2 is no longer relevant in any way. Only GSTR1, GSTR2B is relevant. That is why 2 has been totally removed. Then, in case of non-payment of the value of supply plus tax, in case of inward supply within 180 days, ITC availed needs to be paid along with interest under section 50 while filing the GSTR 3B. So there is a rule which has been substituted here. So therefore here what happens, as we saw here, the registered person should pay to the supplier the value of the goods within 180 days from the date of issue of the invoice. Wherever the registered person, he has availed the input tax credit to pay to the supplier the amount along with the tax. The time limit is 180 days from the date of issue. If he does not pay, okay, if he has availed the input tax credit and it does not pay the respective taxes within 180 days, then he shall, and also he has not paid to the supplier, he will pay an amount equal to the ITC availed along with the interest payable thereon while furnishing in the GSTR 3B for the tax period immediately following the period of 180 days from the date of issue of the invoice. So therefore, how to pay the respective amount in case you have claimed the input tax credit, but you have not made the supply within, you have claimed the input tax credit, but you have not paid the amount within 180 days. In that particular situation, immediately after the period of 180 days, whatever month is there, that will be the tax period. In that particular tax period, he will pay an amount equal to the ITC, whatever is levied, along with the interest. That is what is supposed to be done. So again, there is an exceptions which is there where the value of supply variety does not apply. That is your first is reverse charge mechanism. In reverse charge, it doesn't matter. Second, deemed supplies without consideration. And third, additions made to value of supply on account of the supplier's liability. These three exceptions are covered here. Then 50% of inadmissible ITC to be reversed in 3B by banking company or financial institution. There has been a change in amendment here also, wherein the reference to GSTR 2 has been removed. Fine. That is the only amendment. Otherwise, the rule is pretty much the same. Reference to GSTR 2 is removed. So wherever the GSTR 2 is there, that is removed. And also the last column, the amount referred shall subject to credited to the electronic credit ledger. This also is no longer relevant because your GSTR 2B is anyways there. So if it is there, whatever 2B credit is there, so you have to claim 50% of the credit. Anyways, the total credit will be reflected in GSTR 2B. I will claim 50% of the credit and balance you reverse it. That matter is over. So therefore, these were the various conditions of rather various amendments which are occurred in the input tax credit chapter. Interest is calculated from which date? After 180 days or from invoice date? It has to be calculated from invoice date only, not after 180 days. Because you are supposed to, you have availed the credit and you have not paid your person for 180 days. So therefore, that entire gap, on the entire gap of the amount, you have to pay the respective interest. So that was your amendments based on the supplementary study paper. Now we come back to our discussion of the ITC chapter so that we can just go through this before we work out some other problems. So as I told you, 36.1 document invoice, debit note, bill of entry is the basis on which you can claim. As we already saw, reference to 36.2 has been removed. We already saw the amended rule number 36.4, wherein the details of invoice have been furnished by the supplier or in GSTR 1 and ITC has not been restricted. 180 days concept in 37.1 also we have seen in a very, very clear basis. Therefore, important conditions in brief, you have to take the registration for taking the input tax credit. You have to use the goods and services for business purpose. Then there also clarification with regard to molds and dies by original equipment manufacturers to component manufacturer. Two things are there. Wherever the molds and dies are owned by the manufacturer, which are provided to the component manufacturer, where both are not distinct on free of cost basis, it is not a supply as there is no consideration involved. But and also since they are whatever is provided by free of cost is in the course of business, no requirement of revealing reversing the input tax credit. However, the contract is for supply of components. In that particular situation, the OEM should reverse the credit availed on the same, as the former is not taken to be as course or furtherance of the business. So these are the various conditions for claiming the input tax credit. Clause AA also we have seen now in the supplementary study paper as to what are the various rules which are to be taken into consideration. Fine. And what is GSTR 1, GSTR 2B, GSTR IFF? All these people who have regularly filed the GST returns in the articleship, you know what are these. It's very, very clear. Fine. Then some problems on this we have seen. This illustration is important. This entire PPT I'll be uploading after today's session. So this one is important because this particular example is not given anywhere because it relates to an amendment. This I only have made this and given for you to understand. A problem based on this you can definitely ask. It may be a 3 to 4 mark question. So this illustration is very, very important. Then if in case of tax on demand involving the fraud, in that particular situation, ITC, whatever is claimed on the tax, will not be taken into consideration. And sometimes bogus ITC is claimed even if proper tax invoices are not there, restrictions have been placed in that particular situation. So whatever invoices or debit notes are uploaded can be availed in full. Recipient gets in GSTR 2A and GSTR 2. Then another example what we have seen, on this also you can expect the question in the examination. This is Atlas Private Limited. So in this also, please focus on this. Similar question can be expected. Then again, what are the conditions? Receipt of goods or services. The person claiming ITC should have received. Bill to ship model also are covered. Wherever instead of delivering to the registered person, you are sending directly to the customer. That also ITC is available. And receipt of goods under 16(2)(b), including delivery to another person by way of transfer, that also is received in such particular situation. Okay. Then further examples here, this we have already seen, and 16(2) conditions will be there. Lots of installments, that also we have seen. This problem we have worked out. Second proviso, within 180 days he has to make the payment interest. This also we have seen in the this only. If you see in the exceptions column, supplies on which tax deemed supply and all this are covered. And then, as I told you, if you're claiming the depreciation on the GST component, you cannot claim the ITC. Don't get confused here. See, here many people may get confused that if you claim the depreciation, many people may get confused that if you claim if you claim the GST, if you claim the depreciation on the amount, total amount itself, the credit is not allowed. That is not the intention of the law here. The law says that if you claim the depreciation on the GST component, if you claim the depreciation, that means you are assuming that GST to be the cost of the asset. So the moment the GST is the cost of the asset, where is the question of claiming input tax credit? So that is precisely why he says that if you avail the depreciation on the cost of the asset, please don't avail the input tax credit, tax on inputs as input tax credit in your books. That is what the law says. So section 50 says that interest is payable on wrong ITC availed only if the ITC is utilized to pay output tax levy. ITC is simply availed and kept in credit ledger, but not utilized. No interest payable. But in this slide, page number 63, it points out only about availed and not about utilized. See, there is a lot of litigation with regard to that. If you cover the accounts and payments of tax chapter, wherein section 50 will be discussed in a very detailed manner. In that particular situation, you will get total clarity. Fine. In this case, though you have put it in your credit ledger and not utilizing that, agreed, there is some point that there is no loss as such to the government. But the interpretation are two-way. There is no proper clarification with regard to that. If you are availing it, anyways, the interest will come for sure. But in the definitely, it says availed only in the provision. The provision doesn't say utilized. The provision says availed only. Till now, there is no change in that. So as of now, we have to take it as availed, because when you are reversing that credit in the form DRC3, okay, see technically what is happening now, you are paying the respective GST to the supplier. Okay, you are claiming the respective input tax credit. Now that person has shown that and he has paid the liability also. But in your case, you have claimed the input tax credit, which is now an automatic route. Okay, so a situation where you don't have revenue and you don't collect GST, the credit would have been kept like that only. But still you are not supposed to avail the credit at all. So you reverse the credit. You reverse the credit, because only if you reverse the credit, in that particular situation, the revenue goes to the respective government. So therefore, the provision mentions avails only. So the interpretation is, if you are availing the input tax credit itself, the interest will get triggered. So I hope all of you understood the depreciation and tax component part also. Time limit, as I told you, very important. 30th of November succeeding the financial year or date of filing annual return, whichever is early. Okay, this slide also is very, very important. The evolution of the ITC mechanism. All of you also, when you have written your exams in IPCC level, you must have seen a lot of difference in these respective provisions. I'm presuming at that point of time also you would have read those provisions. The provisions have changed only total. 2017 to 2019, no need of GSTR 2A or 2B. It is just for viewing the credit, that's all. 90 to 22, they put a percentage rule. Okay, 2B, it is given so much. More than up to 20 to 20%, more than what is given, you have to take care. Then later they changed it to 5%. But now what they have done, total linkage with GSTR 2B, because it is auto profit. So whatever is there, you can claim that. Fine. And these are the example what I've given. I hope you got the clarity here. And that was your section 16. With the 16 only has a lot of amendments. So make sure you cover all of that very clearly. Okay. Yeah. So 17 subsection 1, goods are or services or both are used by the registered person, partly for purpose of business and partly for other purpose. The amount of credit shall be restricted to so much as it is applicable to, whichever is applicable to business, to that it will be restricted. So wherever a goods or service are used for providing taxable and exempt supply, then credit will be restricted as is attributed. This only is given in rule number 42 and 43. Then exempt supply, we have seen this in exempt supply will include all of these things. Fine. And again, here only that duty credit scripts gets added as per the amendment. NBFC option is there. 50% of the eligible ITC can be claimed. Once you exercise the option, you cannot withdraw it, and 50% will not apply to the tax on the supplies made by one registered person to another. 17 subsection 5, again very, very important from examination point of view, gives a list of input tax credits which are not eligible from the GST perspective. So what all are given here? Motor vehicles for transportation of persons having approved seating capacity of not more than 13 persons, except when they are used for making the following supply. Number one, further supply of motor vehicles or transportation of passengers or imparting the training on driving. In these three particular cases, you cannot claim the respective input tax credit. Also not available in certain cases where vessels and aircrafts, just similar to motor vehicles, in case of vessels and aircrafts also it is not available. Then insurance, services, maintenance relating to the motor vehicles, vessels and aircrafts also not available. Then you have multiple items like food and beverages. All these you have to remember, because somewhere hidden in the question he will ask at that point of time whether it is blocked credit or not blocked credit. At that point of time you should have total clarity as to what your opinion is. Membership of club, health fitness center, traveling, travel benefits and all of these things. Then there was a confusion last time when many of us were working out the problem. Few of us asked me the difference between point number C and point number D. Very, very important point for us to understand. C talks about the works contract service when supplied for construction of immovable property other than plant and machine. So when I say works contract, what does it mean? I employ a particular contractor who provides the material as well as he provides the labor. I'm using that particular works contract person for construction of a building, but not plant and machine. The only building I'm constructing. In that particular situation, I cannot claim. But if this works contract is for further supply of works contract, that means I'm an interior designer and I'm hiring a contractor for doing the basic construction. I do the design part and I market to my customer as a package. I say end to end everything I will execute. That means I am using the works contract service, whatever I'm paying to the contractor, I'm using that particular service for me to provide the service. I hope you got it. So that is why here it is available only if an input service for further supply of the works contract service. So that means here, if you see that I am a person, I'm procuring the contractor service and I'm constructing my office premises. Will that come here? Definitely it is a blocked credit, it will come here. But I'm providing further works contract service like interior design, architect, etc., covering everything, then it will be claimed as the input tax credit. That is number one. Second one speaks about goods or services or both received by taxable person For constructing of immovable property, that means you purchase cement. You purchase cement and you use it for constructing your office building. You purchase steel and you use it for construction of the office building. In that particular situation also, the ITC will not be available. Fine. Then goods on which tax not paid into section 10. Under composition scheme, if you have paid any tax, it will not come. Goods or services are received by non-resident taxable person, personal consumption, lost, stolen, destroyed, or disposed by way of gift or free samples, tax paid in accordance with 54, 129, 1. These three aspects. And then we worked out one problem. Then 17 subsection 6, which basically talks about the manner in which it has to be apportioned. Plant and machinery explanation is given. Very good. Most of you remembered that it excludes the telecommunication towers. So some you may get asked problems based on this, where pipelines also are mentioned, whether you can claim the credit or not. So you have to remember that as well. Okay. Claim of banking company or financial institution we have seen, not claiming the credit, and then whatever admissible you can reverse it in the 3B. Then 52, 53 we have seen this also. What are the main important things what you have to keep it in mind here? Inputs which are used for business and non-business, input which are used for taxable and exempt supplies. These particular two situations are there. In both these two situations, rule 42 will be applicable. How do you calculate as per the rule number 42? First, to take the total input tax. Total input tax includes everything, whether it is blocked, whether it is eligible, everything is included. So that is T. Then other exclusively you are using inputs for purpose other than business, that is T1. Exclusive for exempt supplies is T2. Then T3 is your blocked credit. So from T, if you remove T1 plus T2 plus T3, you will get the common credit, which is C1, and amount of credit attributable to inputs exclusively for affecting other than but including is T4. So whichever is exclusive for taxable supply, that is T4. Then determine all these four. Then you get the common credit after you remove T4. Then you have to ascertain the common credit attributable to exempt supply, E by F into C2. This is the way you have to do it. So whenever for the last tax period, this E by F is not there, you have to see why for the last tax period, you have to take the values and accordingly do the respective calculation. Fine, I hope this is clear. Then you have to take for non-business purpose straight away 5% of C2. Balance, you will get the common credit. You have to see separate. We have worked out multiple problems based on this. Just for revision, I'm going to see. Once you get the D1 and D2 aggregate, you have to reverse it. Fine. So therefore, we have also seen these two conditions wherein every month you do this exercise and you compare it with the last. If whatever you have claimed is more, then you have to reverse it. If whatever you have claimed is less, then you have to claim further. If you have claimed more than what is required to be claimed at the end of the year, you have to reverse it along with interest. You have to reverse it along with interest. Fine. So these are some of the points of rule number 42. This table is very, very important. These are basically the steps for claiming the input tax credit and the common ITC. You have seen multiple problems which speaks about calculation of common ITC, calculation of net tax liability, calculation of gross ITC. All that we have seen multiple solutions. Fine. Then example based on rule 42 we have seen. The rule 43 talks about the capital goods in this particular situation, how to calculate the common credit and then do the reversal. Inputs exclusively for non-business purpose, supplies other than exempt supplies. These three cases you have to take into consideration. Fine. And these are all the solution. These are all, if you just please go through this, anywhere you are getting stuck, we have discussed this provision in very great detail, I think in the second session of ITC. So anywhere you are getting confused where how to remove this 5% per quarter or something like that, please let me know. You have to take basically the useful life of the capital goods as 60 months. Once you take the useful life of capital goods as 60 months, you see how it is being reversed over a period of time. Fine. So these explanations we have seen. These explanations are also important. How to take into consideration what all to exclude, what all to include, that also you have to make a decision. Okay. These are the various steps for capital credit. We have seen a problem based on this, apportionment of credit. All this, these are some cases which are covered here. Entitlement of input tax credit. The samples which are given free of cost without any consideration is not supplied, except where it falls within the ambit of Schedule 1. However, where activity or distribution falls within supply, the supplier will be eligible to claim the input tax credit. Any questions? Sir, few days back, I asked you regarding credit for Pulsar. Is it the motorbike? Yes, 17 subsection 5. 17 subsection 5. Pulsar transporting passengers comes under motor vehicle. Therefore, you cannot claim the credit. For building materials, for what purpose you are using? That is important. You are using building material for what purpose? That is an important point here. Okay. If you are using it for as a part of the works contract and you are doing further supply, in that particular situation available. If you are using for construction on your own account, even if it is in course or furtherance of the business, then it is not. Two things are covered here. So buy one, get one free. Most of you have understood this. I have seen it in the problems also. Discounts including buy more, get more. Also you can claim. So save more. All these we have discussed. And this technically, I've seen that you have all worked out the problems also in the correct manner. Then ITC reversal when time expired medicines. When this also we have seen. Whenever he returns the goods, he can issue the bill of supply or the 18(1)(a) application of registration when he becomes liable for registration. This is also very, very important. Credit in special circumstances where he has applied for registration within 30 days from which he becomes liable and granted such registration, he'll be able to take the credit of input tax in respect of inputs held in stock and finished or semi-finished goods on the day immediately preceding the date from which he becomes liable to pay the tax. Okay. Whenever he takes the input on the day preceding the date on which he becomes liable to tax, whatever stock is there, he can claim the input tax credit. Similarly, voluntary registration, he also can claim, but in this particular situation, not liable to pay the tax. The date preceding the date of grant of registration has to be taken. On that particular date, whatever stock is there, he can claim that as the input tax credit. Okay. In case of composition scheme to regular scheme, wherein a person was there under the composition scheme, he is now shifted to the regular scheme. Capital goods should not be covered here. Inputs inputs in stock, inputs in finished, semi-finished goods only to be covered here, and also on the capital goods preceding the date from which he becomes liable to pay the tax under section 9. So therefore, whatever inputs are there on that credit of input tax, he should claim the credit. On the finished or finished goods, capital goods are also covered here. In first two cases, capital goods are not covered. In this case, capital goods are also covered here. Whenever he becomes liable to pay the tax under section 9, a day preceding that date, whatever capital goods are there, he can claim the input tax credit. But capital goods, he will be reduced by such percentage points as may be prescribed. We have seen those percentage points also. Similarly, the next point is exempt supply becoming taxable supply. Whatever taxable supply is there, input tax held in inputs held in stock, inputs held in finished or semi-finished goods, stock relating to exempt supply, and small change compared to 18(1)(c) here. Capital goods exclusively for exempt supply. It becomes taxable supply. In that case, you can claim the input tax credit as reduced by that percentage points. And 18(2), no ITC after 1 year of issue of invoice. Registered person shall not be entitled to take ITC under subsection 1 after the expiry of 1 year from the date of issue of invoice relating to such supply. Then unutilized ITC in relation to change in constitution. Wherever there is a change in constitution of the registered person, sale, merger, etc., whatever credit is there, he will transfer that to the amalgamated or merged business. Fine. And sometimes what happens, registered person who has claimed the input tax credit, he opts to pay the tax under section 10, or the taxes what he was supplied, it becomes totally exempt. In that particular situation, whatever amount is there, he will pay to that extent by debit in the electronic rate ledger equivalent to the credit. So all this we have discussed. I hope you are able to recollect. The main purpose for me for brushing through all these provisions is for you to revise. If you are revising, you already revised at home, is very good. But for persons who are not revised, make sure this is like a revision class. If you are not getting stuck anywhere, any provision which needs further explanation, please let me know. Input tax credit on Apple iPhone can be claimed. Technically, if you are using your Apple iPhone for the purpose of your personal thing, okay, just for your personal conversations you are using, you cannot claim the input tax credit. But if you are using this Apple iPhone only for the purpose of your business, so purely in course or furtherance of the business, in that particular situation, you can claim the input tax credit. So this, many people, I mean, it is very clear. Many people buy it for their personal purpose, but tell it is for their business. It is very difficult since GST, as I told you always, it is a self-assessment tax. So the onus is on us. The responsibility is on us to prove that the expenses, assets are used for the respective business purpose. That is the most important point which you have to remember. It's an important thing which you have to remember here, that whatever be the respective uh, credit what you are claiming, it has to be for in course or furtherance of the business. So even if it is a phone or a laptop or an iPad for that matter, for example, if you take an AC, a person is into coaching services, training services, he purchased an iPad. Why? Because through the iPad, he's conducting the coaching. Purely in course or furtherance of the business, he can definitely claim the input tax credit. So therefore, that is a very, very important point for us to understand. For what purpose he is using. So Apple iPhone, if you're using for the purpose of business, you can claim the respective credit. Input tax credit on capital goods, you can claim totally. There is no problem. Okay. There is no question of, see, only the apportionment of credit here, and whenever the shifting is happening. When does the shifting happen? Once from composition scheme to regular scheme, you shifted. From exempt supply, you have shifted to taxable supply. Only then the concept of reversal of credit of tax on capital goods come. Okay. But when it comes to pure claiming of input tax credit, you can claim the entire thing. Don't get confused. You purchase, earlier this concept was there in excise, that once you purchase a capital goods, you can claim the credit, and the credit has to be distributed over a period of 5 years. This was the point at that point of time in excise. In GST, it is very clear. You can claim the input tax credit if you have a regular GST registration and you have purchased a capital goods. Let us assume you have purchased a furniture for your office. You have purchased an air conditioner for your office. In that particular situation, you can claim the credit. Okay. There is no question. You can claim the entire thing. Your second question, how much can be claimed? Entire thing can be claimed. There is no question of claiming only part or not part. When credit claim will be reversed, credit claim will never be reversed. It will be reversed only if it is a blocked credit, or if you have claimed a blocked credit, like you have purchased a motor vehicle. Motor vehicle is a capital goods, but it is blocked under 17 subsection 5. Okay, but you claim later, you realize you are not supposed to claim. Only then you can reverse it. Fine. Till what time it can be claimed? It can be claimed anytime. Can the claim be delayed? You can claim up to 30th November of the succeeding financial year. Everything is clear. This reversal 5% per quarter is applicable only in these two particular cases. Please bear in mind, in these two particular cases only, the reversal of credit claimed on capital goods will be applicable. Okay. Yeah, if you are going from composition to regular scheme, you can claim the input tax credit. If you are coming from regular scheme to composition scheme, you have to reverse the input tax credit. I hope you got the point. I hope you got the point. When you are moving from composition scheme to regular scheme, you can claim the input tax credit of the capital goods you have purchased after reducing that percentage, 5% per quarter. You reduce it and you can claim the input tax credit. If you are converting from a regular scheme to composition scheme, whatever ITC you claimed on the capital goods, you have to reverse it after reducing the percentage points. I hope it is clear. After cancellation of GST registration, any ITC is there, we have to reverse it. Yes, we have to reverse it. That provision also we have covered. Whenever the GST registration is cancelled, any ITC is there in credit ledger, you have to reverse it. You have to reverse it. I hope it is clear, everyone. Okay, so again, 18 subsection 6 also is an interesting provision where you have purchased the capital goods, you have claimed the input tax credit, and you have sold that capital goods. Then what you can do, whatever input tax credit you have taken on that said capital goods, an amount equal to that you will pay as reduced by such percentage points, or the tax on transaction value. After reducing the percentage points or calculate the transaction value, pay the tax on the transaction value, whichever is higher, you have to take into consideration. So refractory bricks, molds, dies, etc. When you are supplying as a scrap, the taxable person may pay the tax on the transaction value of such goods. I hope it is clear. Okay, this is your then rule number 40 covers the claiming of credit in special circumstances. As I told you, this rule also is clear. 5 percentage points. We have seen all these particular rules also certified by a CA. These are all just procedural aspects, not very important from examination point of view. But you have to just remember that 5 percentage points per quarter, more than 2 lakhs if you are claiming, you have to get a CA certificate. Transfer of credit in case of merger amalgamation in these particular situations. All these rules, please go through. Okay, manner of reversal of credit under special circumstances. Okay, we have seen all that. So therefore, to summarize all this, you please revise entitlement of credit. These 3 situations: registration or voluntary, composition scheme to regular scheme, exempt supply becomes taxable supply. This table is very, very important. Okay, this table you have to make sure that you clearly this. Okay, so person who has applied for registration within 30 days from the date from which he becomes liable for registration has been granted. In that particular case, the inputs held in the goods and inputs held in the semi-furnished and finished goods the day preceding the date when he becomes liable to pay the tax. Okay, ITC 1 year, that condition is anyways there. Composition to regular scheme, exempt supplies, all that I hope it is clear. Then problems, we have covered all these particular problems. Then rules of reversal of ITC. Okay, I hope all of you are able to recollect all of this. Any things you are not able to recollect means let me know. It is cause of concern. If you are able to follow everything, I'm very happy. Okay. Change in constitution, value of the assets as state level, apportionment of input tax credit, all these problems, I hope you remember, we have worked out. Input service distributor is the next concept what we saw. As I told you, whenever a company has multiple branches and it has a main head office also, the head office has incurred certain common expenses. This common expenses is basically for all the branches of the respective company. In that particular situation, the credit has to be distributed to the respective branches in the ratio of their turnover. Okay, how we will distribute, method of distribution we saw last class. We worked out a problem also. I hope there is crystal clear clarity with regard to that. If any queries, again please ask me, we'll again do it. Okay, then relevant period, you have how to see the turnover. If they have the turnover in the financial year preceding, you have to take that particular one. In the financial year preceding there, if there's no turnover is there, last quarter you have to take into consideration. Okay, okay, all these I hope you remember. These are all the problems what we have worked out. How to distribute the input tax credit is covered in rule number 39, which says amount distributed, how to take all this distribution, how to distribute the tax. Another important point which you have to remember is if any branch is located in the same state, whatever nature of taxes you distribute it in the same way, it is located in another state, you have to distribute it as IGST only. Payment of tax. Again, this order of utilization, very, very important. Some important points you have to keep in mind. first complete utilization of integrated tax, first towards integrated tax, and after that towards the payment of central tax or the state tax. Okay, then central tax, first towards central tax, then towards integrated tax. State tax, first towards state tax, and then towards integrated tax. Fine. Again, first input credit of state tax will be used for payment of IGST only when balance of CGST is not available. Okay. First IGST credit you use, then CGST credit you use, then you use the SGST credit for payment of IGST. Okay. Utilization of credit in this particular situation, as I told you, IGST first you have to utilize credit. After you utilize the credit of IGST only, the balance credit you can use. Since all of you have seen what is the electronic credit ledger, electronic cash ledger, and filed the multiple GST returns, basically everyone who have done your articleship must have filed your GST returns for sure. So everyone, all of you must have filed the GST returns for sure, because all the CA offices have the GST as their service offering, because it is a new law and it is a new opportunity. So therefore, most of the chartered accountants have that. So I think most of you know how the GST portal looks like. So therefore, I'm not practically showing that for you. If anyone wants to see practically, let me know. But I'm sure most of you have seen the portal and what are the ledger and all of that. Okay. On May 1st, 2022, illustration is given by Mr. Viraj. Okay, let us see what you have said. Sir, on 1st May 2022, after cancellation of GST, we have to reverse it. Yes, we have to. Then on 1st May 2022, Sanskar Limited purchased 42 lakhs worth of land for construction of new warehouse for stocking new products. Purchase of cement and other materials for construction, including GST 1 lakh. GST credit is 50% of payment, 15 lakhs. Can you explain this point? What to do? Is credit available? How much to be included in the cost of construction? See, I don't is this any problem, or have you encountered this case in your practical this thing? That I'll have to know, because the problem, the question appears a bit incomplete. You have purchased 42 lakhs worth of land. Okay, that is land. You have to capitalize land for construction of warehouse. Purchase of cement and materials for construction, this you have to capitalize. GST credit is 50% of payment means, I didn't understand that. Is rupees 15 lakhs. Can you explain this point? Is credit available? Credit will be available depending on what this Sanskar Limited does. What is the output tax liability of that? Only if you tell that only, I'll know whether credit is available. Okay. So if this is a case study, I would suggest you to please explain it to me in proper terms with the entire facts of the case. Then I can help you, because the question as such appears a bit incomplete. If you can tell me the entire clear-cut facts of the case, then I can explain it to you in a better manner, Viraj. Fine. Then the summary of utilization is only important. First, to take IGST, ITC credit. So how do you approach a problem which is asked based on order of utilization of credit? These slides are important for you. First, to take ITC of IGST. First, you have to use that towards the payment of output IGST. After you use it for the payment of output IGST, then the next you can use it for the payment of CGST or SGST in any order or proportion. Fine. So first IGST credit, what you have to do? You have to use it for the purpose of output IGST. IGST input first used towards the payment of output IGST. After that, whatever is left out, you can use for payment of CGST or SGST in any order as per you require. It is totally up to you. Before utilization of the CGST, SGST credit, the credit of IGST must be exhausted totally. This is an important point. That means first use for payment of output IGST, then you whatever you can use for CGST or SGST in any proportion. Then before you utilize this CGST, SGST credit, whatever IGST you have, you should have exhausted that total. That is an important point. Then ITC of CGST, what you have to do? First, you will use for payment of output CGST. Then you will use for payment of output IGST. Cannot use the input tax credit of CGST for the payment of output SGST. Similarly, ITC of SGST first for SGST output, then for output IGST. You cannot use for output CGST. Then we saw an example based on this also. Then 86A, again an important point, you can place the restriction on input tax credit if you find that the person claiming the ITC is non-existent or the registered person is not in possession of the tax invoice or the valid document. Okay, in these circumstances, the credit can be claimed. This also we have seen in the previous session. In case any amount is there in credit ledger, 86B rule will be applicable. If the turnover value of the outward supplies is more than rupees 50 lakhs per month, you can say that 99% of output tax liability only you can claim the input tax credit, and the balance you have to pay through the electronic cash ledger. Okay. But exceptions are there to 86B. If you have paid 1 lakh income tax, if you have receipt of refund of ITC up to more than 1 lakh, then excess of 1% payment of output tax liability if you do. In these three situations, exceptions are there. We have seen all these and worked out multiple problems also. Fine. So these are the provisions what we have seen till now, and the problems all we have worked out with the solutions I have given one single PPT so that you can go through the same. Then we also saw the job work related provision. This we saw in the previous session only. So I hope all of you have your memories afresh. Very, very simple provisions with regard to the job work. Main important points which you have to remember in job work is the principal has to be a registered person. The job worker may or may not be registered. He can be registered only if he crosses the aggregate threshold of 20 lakhs or 40 lakhs as the case may be. And what are the provisions in case the principal procures the inputs and sends it to the job worker? If the principal procures the capital goods and sends it to the job worker, he need not reverse the credit of inputs or capital goods what he's sending. But provided the condition is the inputs have to be returned within 1 year and the capital goods has to be returned within 3 years from the date of the goods which are being sent, date of issue of invoice, that the period of 1 year or 2 years has to be taken into consideration. Fine. So these benefits we have seen 1 year or 3 years respectively from the date of sending the goods to the job worker. Again, in case the time has not been complied with, you can also file a petition with the commissioner for condonation of delay, and further extension up to 1 year or 2 years can be accepted. After processing, he can send it to another job worker, he can send it back to the principal, or he can also send it to the ultimate customer against the payment of tax. All these can be done with regard to the job work related provisions. We have seen this in last session only. I hope therefore the memory is afresh. For the persons who have not attended last year's sessions, please attend this. We went to these provisions in detail. 19.1, 19.2 with regard to job work also we have seen. You have to receive it within the respective time. If you don't receive it in that particular situation, at that point of time, you have to pay the amount. That will be treated as a supply. In case the particular principal does not receive it within 1 year or 3 years, as the case may be, in that particular situation, the amount at during the time where the principal send it to the job worker will be treated as supply, and from then interest has to be paid. Fine. So all this conditions, challans, etc. we have seen. Any queries here, please let me know. We have seen all these provisions, worked out some illustrations also. Okay, ITC 04 on a quarterly basis has to be filed by the principal within 25th of the month following the quarter. Okay, that is the return. In that what all ITC 04, what all will be there? All the details of the goods quantity along with values will be mentioned, whichever is sent to the job worker for the purpose of job. Okay, these rules also we have seen, worked out these respective questions also. Okay, so that was a quick revision on what all we have discussed, and any queries here, or we go to the problems, further problems which have been left out. Now this we have seen, and yeah, this is the next question. Please go through this question, try to answer it. PQR Company Limited, a registered supplier of Bangalore, Karnataka, is a manufacturer of goods. The company provides the following information pertaining to GST paid on inward supplies during the month of April. That is the current financial. Life insurance premium paid by the company for the life insurance of factory employees as per the policy of the company. There is no legal obligation for such insurance for employees. 1,50,000. Raw materials purchased for which invoice is missing but delivery challan is available. 38,000. Raw materials purchased which are used exclusively for zero rated supply. 50,000. Works contract service used for repair of factory building which is debited in the P&L account of the company. 30,000. Again, company purchased capital goods for 4 lakhs, claimed a depreciation of 44,800, the 10% on full amount of 4,48,000 under income tax. Okay, now this also is there in your study material so that you can refer it in the study material. One moment, I'll just. This basically is a illustration 8.103 is the page number 8.103. Okay. In the month of September of previous financial year, PQR Limited availed ITC of rupees 2,40,000 of purchase of raw material, which was directly sent to the job workers' premises under a challan on 25th September previous financial year. The said raw material has not been received from the job worker up to 30th April current financial year. Okay. All the above inward supplies except at serial number 3 above have been used in the manufacture of taxable goods. Inward supply of serial number 3 above have been used for the manufacture of exempt goods. Let me see. There seems to be a small, inward supply except at serial number 3 have been used in manufacture. Inward supply at serial number 3 above have been also used in the manufacture of exempt goods. Compute the amount of net ITC available with regard to PQR Limited for the month of April. Necessary explanations for treatment of various items. Assume that all the other conditions have been fulfilled. So here what you have to do, you have to calculate what is the total ITC which is available. Item by item, please go through and try to answer this. Please try to answer this problem, everyone. Some answers for next 2 minutes. I'm giving you for you to just answer on each item. If not, and also after that, we'll work out the problem. Look at each item and try to give your answer. The first one, life insurance premium. It's a fairly simple problem. Here, with regard to ITC on life insurance, if it is not obligatory under any law in force, the respective input tax credit is not allowed. Okay, it is very, very simple. You have to give a clear explanation when you're answering the problem. ITC on life insurance is available only when it is obligatory by the employer to provide it. If it is not obligatory, the said ITC is blocked. Second one, raw materials is purchased, okay, for which invoice is missing, but delivery challan is available. What is your answer for this? Second one, very interesting. Second one, invoice is missing, but delivery challan is available. Very clear. 16 subsection 2 clause A clearly says that the invoice needs to be available for the claiming of input tax credit. So therefore, just because delivery challan is available, it is not a valid document for the purpose of claiming input tax credit. So second one also, the input tax credit is not allowed because delivery challan cannot be considered as a correct document. Then the third question here, raw materials purchased which are used for zero rated supply. Very, very interesting question here. If you see, beautifully tried to confuse everyone. Beautifully tried to confuse everyone. Now, what does it say? It says raw material purchased which are used for zero rated supply 50,000. And here if you see, all the supplies inward supplied as serial number 3 above has been used for manufacture of exempt goods. Inward supplies at serial number 3 have been used for manufacture of exempt goods. So 3 it says raw materials purchased used for zero rated supply and it is used for exempt goods. So what is to be done here? Can anyone tell me? Beautifully tried to confuse. Beautifully tried to confuse. You see here, this is a case where the supply is exempt and such supply is being exported outside the country. Did you understand? Let us take an example here. Like, for example, rice is an exempt item. This exempt item, if you are supplying outside India, it becomes a zero rated supply. Just because it is exempt, you cannot say the ITC is not allowed. ITC has to be allowed because it is a zero rated supply. So therefore, even if the zero rated supply had it been supplied within the territory of India, if it is an exempt supply, it doesn't matter. It is a zero rated supply. The moment it is a zero rated supply, whether it is actually taxable or exempt does not matter. So therefore, the ITC is allowed. So therefore, in this third situation, zero rated supply 50,000, ITC is allowed. What about the fourth one? Works contract service used for repair of factory building, which is debited in the profit and loss account of the company. Debited for the profit and loss account of the company. Another very, very interesting point. Okay. Where does it come, first of all? Whether it comes in 17.5C or 17.5D. That is the point, which what you have to see here. Okay. Try to, this one you see, try to answer, give an answer for this. Works contract service used for repair, which is debited in the profit and loss account of the company. Okay. If you go back here, we quickly go back to 17 subsection 5 here. Works contract service and supplied for construction of immovable property, except when it is input service for. So therefore, whether it comes in C or D is the first question. The question clearly says, works contractor service. So the moment it says works contractor service, it is purely related to 17.5C. So therefore, when supplied for construction of immovable property, the word construction is very, very important here. If it is for construction, whether it will go to P&L or balance sheet, whether it will be capitalized or whether it will book in revenue. What is your view? What is your view? So therefore, even it is a works contract service, when supplied for construction of immovable property, then it is blocked. But here what is happening? Let us go to the question here. Here what is happening? Let us go to the question and see. Very interesting question. Very, very tricky point. You can expect such questions in the examination point of view. Here, Works contract which is debited in P&L. So if it is used for construction, why will it be debited in P&L account? It is construction means it straight away goes to fixed assets. So since it is debited to P&L account, you cannot say it is for repair of factory building. So a repair of factory building which doesn't go to the balance sheet and debited to the P&L, it is a business expense and you can claim the respective input tax credit. So therefore, this 30,000 can be claimed. Therefore, this 30,000 can be claimed. The next one, the company purchased capital goods for 4 lakhs, claimed depreciation of 44,000, 10% on full amount. In this particular situation, since he's claiming the depreciation, in this particular situation, you cannot claim the input tax credit. Since he has claimed the depreciation on the GST component also, you cannot claim the input tax credit. Very, very clear. Okay. Now we come to so that was your fifth item. Now we come to the job workers premises. Here's what is happening in the month of September of previous financial year. Okay, what exactly he is doing? Let us see once. Month of September of previous financial year, PQR availed ITC. So previous financial year, you claimed the input tax credit sent to the job worker under as a challan. Okay, on 25th September, he has sent under the challan. Okay, so what does it say? 2 lakh for previous financial year availed ITC of 2 lakh 47. He has already availed on 25th financial year. The same has not received back up to 30th April current financial year. So what is the time limit given for inputs? If it is not received within 1 year from the date of sent to the job worker, in that particular point, you have to treat the first sending of the goods itself as a supply. But here it is received within 1 year, so nothing needs to be done. So nothing needs to be done. If it is not received 1 year, that amount at point of time, whatever input tax credit is there, you'll have to show it as supply. Okay, and reverse the respective input tax credit. But since it is sent within time, that need not be done. So I hope each of these items you have got clarity. Very tricky question, can definitely be expected in the examination. Fine. So let's take a short break here and then we come back and work out further problems based on input tax credit. I hope all the provisions we have revised will work out some more problems before we close for the day. Thank you very much. See you in the next 10 minutes. Done. So next question. Quanto Enterprises is not required to register. Now this question is on page number 8.129 of the study material. Okay. 8.129 and 8.130 it continues. Okay. So Quanto Enterprises is not required to register under the CGST Act. However, it applied for voluntary registration on 17th September. Registration certificate has been granted to the firm on 25th September. The CGST and SGST liability for the month of September is 24,000 each. The firm is not engaged in making interstate outward taxable supplies. It is not engaged in making interstate taxable supplies, outer taxable supplies. Quanto Enterprises provides the following information relating to capital goods and inputs held in the stock. Now, this is a case where he is going for voluntary registration, and what is the input tax he can avail? This question is based on that one. Okay, it provides the following information regarding capital goods and inputs held in stock as on 24th September. Inputs procured on 2nd September, which is lying in stock, CGST 6%, SGST 6%, 4,500 each. Inputs received on 21st July contained in semi-finished goods held in stock, CGST 7,500, SGST 7,500. Value of inputs contained in finished goods 2 lakhs. Such inputs were procured on 19th September last year. Invoice for the goods also availed on the same day. IGST is 36,000. Then inputs valued at 50,000 procured on 13th September, lying in the stock, IGST 9,000. Capital goods procured on 30th September, lying in stock, CGST 12, SGST 6, CGST 6%, SGST 6%. You are required to compute the net GST payable from the electronic cash ledger for Quanto Enterprises for the month of September. You are also required to mention the reason. So you know what is the outward liability which is given here clearly. So you have to now see how much input tax credit is available. That is the question. Please try to work out this problem. Just try based on the provisions. Don't worry about whether it is correct or wrong. Just try to answer. Output tax liability, you know, it is 24,000, 24,000. You just have to work out the ITC. You just have to work out the ITC. Okay. CGST is 24,000. SGST is 24,000. So now you have to claim the ITC. First work out the ITC. So what all ITC you can claim? Okay. First of all, the date is very important here. Okay. He has got the registration certificate on 25th September. Okay, so the day before the 25th September, that is on 24th September, what all are the items which are available? On that, we can claim the respective input tax credit. Okay, so these are the details of capital goods and stock held on 24th September. So on what all he can claim, we have to see. First thing, inputs held in stock since 2nd September. Now, this provision very, very clearly gives that 18 subsection 1 clause B, that in case of voluntary registration, inputs which are held a day prior to the date of grant of registration certificate, you can claim that is 4,500 each. So 4,500 each you can claim as the input tax credit. Then inputs received on 21st July held in the semi-finished goods. Now, if you see here, semi-finished goods inputs also you can claim. So this 7,500 CGST also you can claim as a credit. Then the third point here is your value of inputs in finished goods held in the stock 2 lakhs. Okay. This inputs was procured on 19th September last year. So there is the restriction what it says that in case any goods are there which are procured before 1 year from the relevant date. Here the relevant date is 24th September. So if it is procured with the before 1 year of the previous year, you cannot claim that respective input. So this one, since it is procured on 19th September last year, which is procured more than 1 year prior to this 24th September, you cannot claim the input tax credit. So on this 2 lakhs IGST 18%, that is 36,000, input tax credit cannot be claimed. I hope it is clear. Now going forward to the next one. Inputs valued at 50,000 procured on 13th September, okay, lying in the stock. What about this one? Inputs procured which is held in the stock since 13th September. Whether we can claim. What is your view? Inputs held in the stock since 13th September. And also next one talks about the capital goods. Capital goods 6% and CGST 6%, SGST 6%. What do you do about the capital goods? So these two, if you refer, let us quickly go to revise because I want you to link with the provisions. That is very, very important. So if you go quickly to section 18, which we recently did, 18.1b, this is the first problem based on 18.1b what we are doing. So what does 18.1b say? Here, voluntary registration entitled to take credit of input in inputs held in stock and inputs held in semi-finished or finished goods on the day preceding. So this I hope you understood as to from where it has come. Okay, is that clear? So you have got that exception which is very clear, which is there. Now, an registered person shall not be entitled to take input tax credit in respect of supply of goods or services or both to him after expiry of 1 year from the date of issue of such supply. Now, this is a very, very important point. He says shall not be taken input tax credit under subsection 1 in respect of supply of goods or services or both to him after the expiry of 1 year. Okay. So here, what all he can claim under 18.1b? Inputs held in the stock and inputs held in the semi-finished or finished goods held in the stock. Now we go back to the problem. Yeah. So therefore, inputs held procured on 13th September lying in the stock. So therefore, it said applied for voluntary registration on 17th September. Registration has received on 25th September. So 24th September, here it is procured on 13th September. Okay. Now it is procured on 13th September. Since it is procured on 13th September, it is definitely allowed as the input. So this IGST 9,000 also can be claimed. I hope you got the point. Then you come to capital goods. What about capital goods? Can it be claimed? Very good. Capital goods ITC also you cannot claim because voluntary registration does not cover that. Only that composition to regular and exempt to taxable covers the capital good. This does not cover. So therefore, if you look at the output tax liability that is anyways given in the problem, CGST 24,000, SGST 24,000. If you go to the input tax credit calculation, how do we do that? Inputs held in the stock, CGST, SGST 4545, semi-finished goods 75. This one is nil because it is more than 1 year. 9,000 IGST for 13 September inputs, capital goods is nil. So this is the total credits which are there. How do you adjust it? Again, method of set off also is covered here. First thing what you have to do, finish the IGST credit. So set off the IGST credit first against CGST. Then you look at the balance input tax credit which is there. Okay, so IGST credit is there, then 12,000 CGST credit you set off against the CGST, and 12,000 SGST credit you set off against the SGST. So how much is to be paid? Balance CGST 3,000, balance SGST will be 12,000 rupees. I hope this problem is clear. IGST, ITCS, you can use in any proposal, no problem. One second. My video is suddenly seems to be off. Yeah. Next one. Once shopping. This also is there in your study material. Problem number. Quanto is covered, BND is covered, XYZ also I think is covered. One Shopee is problem number 19 of page number 8.135. 8.135, problem number 19. One Shopee is a retail supplier of both taxable and exempt goods registered under GST in the state of Rajasthan. One Shopee has furnished the following details for a month. Supply of taxable goods 50 lakhs. Supply of goods not leviable to GST 10 lakhs. Details of goods purchased for being sold in the shop. Taxable goods 45 lakhs, goods not leviable to GST 4 lakhs. Details of expenses, monthly rent payable 3.5 lakhs. Telephone expenses paid 30,000 for landline phone at shop and 20,000 for mobile phones of employees. Mobile phones are given to employees for official use. Amount is 50,000. Audit fees paid to CA 35,000 for filing IT return and statutory audit for preceding finance, 25,000 for GST 60,000. Premium paid on health insurance policies as a company policy 10,000. Freight paid to GTA service at 5%. Inward transportation not leviable to GST 50,000. Inward transportation of taxable goods 1,50,000. Goods given as free samples not including taxable goods value 45 lakhs 5,000. Okay, these are all the expenses which are given. All the above amounts are exclusive of all kinds of taxes wherever applicable. Inward, outward supplies are made or from or to registered suppliers within Rajasthan. Purpose of reverse charge also CGST, SGST rates are given. No opening balance. Assume that all other conditions are fulfilled. Following are required to be calculated. ITC credited to credit ledger. Common credit available for apportionment. ITC attributable towards exempt supply out of common credit. Net GST payable. Exhaustive problem based off input tax credit chapter. First work out the ITC where you take into account everything, then work out the common credit, then what is attributable to exempt supply, and then work out the net GST payable. Please try to work out this problem. Can we use IGST at 4,500 each? IGST first you have to exhaust. IGST you have to exhaust against IGST first. Okay, but here there is no IGST. You can utilize like that also, no problem. Please try to work out this. So first question, what is asking? Okay, first question, what is asking, if you see, what is the ITC credited to the electronic credit ledger? Okay, this is the first question, what is asking. So we have to look at all the expenses here. Okay, here Details of goods purchased for being sold in the shop. Taxable goods is purchasing at 45 lakhs. Now, what is the rate of GST which is given? Taxable goods is telling everything is inward charges. It is reverse charge is 2.5. That is the rate, and 12% are all other cases. So in this case, 45 lakhs is the first one. 45 lakhs, CGST 12%, SGST 12%. Okay. Here, so details of the goods which are purchased in the state of Rajasthan. CGST, SGST is 6%, 6% each. If nothing is mentioned, you mention it. Think as though it is zero rate. Intra-state supply only. That is within the state. Then goods not leviable to GST, 4 lakhs. On this, there is no input because you are not paying any GST at all. The next one, monthly rent which is payable at shop is 3,50,000. 3,50,000 here also. Now, though the rate is 18%, actually, don't get confused because you have to take what is given in the question. In the question, it says assume it is 12%. So we take it as 12% only. That is CGST, SGST. On this also you have to take. Then telephone expenses paid 30,000 for landline phone and 20,000 for mobile bill of the expenses. Now, it doesn't matter whether it is landline and mobile for that matter. It is used totally for business. Total 50,000 into 12% again, 3,000, CGST, SGST. Then audit fees paid on for the to the CA. On the CA audit fees, no exemption is given for type of the fees. Entire thing GST will be applicable. 60,000 into CGST, SGST you have to take here in this particular case. So on this also GST will come. Then premium on health insurance policies taken as a company policy. Company policy, health insurance policies, if you see, you have to, in this particular situation, ITC on health insurance policies are allowed only if it is obligatory. But in this case, it is not obligatory. So therefore, this is a blocked credit. So on 10,000 rupees, no ITC can be taken into consideration. So no ITC can be claimed. No ITC can be claimed. Then freight paid to goods transport agency for inward transportation of goods. Now this is reverse charge mechanism. So this also will come. But first, let us cover the balance amount. Goods given as free samples, not included in the taxable value goods. So this additional which is there, free sample also, this is also a blocked credit, right? So this is also a blocked credit as per section 17 subsection 5. Okay. Then the reverse charge mechanism in this particular situation also will be there. That is the freight paid to GTA for non-taxable. Exempt supply non-taxable is there. So therefore this ITC also cannot claim. See, you can do in this approach, or you can take the total input tax and reduce this also. But in the question, he has asked only the total ITC credited to the credit ledger. So therefore, in this first step itself, we are doing the T minus T1 plus T2 plus T3 plus T4. Okay, I hope there is no confusion with regard to the same. Then the next one is freight for inward not leviable. This also ITC will not come. And then in this case, freight reverse charge mechanism 5% for taxable goods. On this it will come 1,50,000 into 5%. So 5% again CGST, SGST will come. So this how you will get the first one, that is your credit to the electronic credit ledger. So on taxable goods, 45 lakhs, CGST 6%, SGST 6%, that is 2.7 lakhs each. Not available to GST, nothing will come. Paid for monthly rent on this 6% each. GST paid on audit fees, on this it will come. Premium, nothing will come because blocked. This is also blocked under 17.5. Then RCM, GTA also, it won't come. Then freight on inward transportation of taxable goods under reverse charge, this it will come on taxable goods. Fine. And then total ITC, which is credited to the electronic credit ledger, is 3,01,750. Fine. So I hope this point is also clear in this particular situation. Fine. So this is the ITC which is credited to the electronic credit ledger. Now out of this, what you have to do, you have to find out the common credit which is available for apportionment. So what is the common credit which is available for apportionment? Whatever you take on the electronic credit ledger, from there you have to reduce the ITC which is on taxable goods and ITC on the GTA for inverter. So exclusively what is used for taxable goods you have to remove. Once you remove that, the balance will be your common credit. Fine. So that is how you have to work out what is the common credit in this particular situation. Please repeat freight on non-taxable goods. It's very simple. See, first case, the freight on non-taxable goods, you are working out the amount which has to go to the credit ledger. So you can work it out in two ways. In last class problem, what we did, we took the total input tax credit. From there, we removed the ones which are blocked credit and for non-taxable purpose. In case of freight paid to GTA, with regard to goods which are not taxable, you cannot claim the input tax credit of that. Though it is subject to reverse charge mechanism, you cannot claim the respective amount as an input tax credit. So that is why we are not claiming this as an input tax credit. Whereas in the previous problem, we claimed it and then we removed it. The way of solving the problem is different. Ultimately, the total end result of the total solution will be the same. Fine. So how do you work out the common credit? First, to take the credit what goes to the credit ledger that you already know. From there, you remove whichever ITC is exclusively attributable to the taxable supply. So first one, obviously taxable goods, the 2.7 lakhs is exclusively for taxable purposes, remove that. RCM exclusively for taxable goods, remove that. Others are all common. 27,600 each will be the common credit. How do you go for exempt supply? Very simple. What is the turnover? 50 lakhs is taxable, non-GST exempt is 10 lakhs. So 10 by 60 into 27,600 is your ITC attributable to the common exempt supplies out of the common credit. I hope you understood the problem. Okay, that is the point number 3. Now we come to the net GST liability per month. Net GST liability per month. Now, how do you work out the net GST liability? First, you take the gross GST liability on forward charge mechanism. That is output tax liability, forward charge, how much you charge from the customer and pay. You take that first. Then to that, you have to remove the ITC. ITC, you already know what is to be taken. You already worked out that you'll get the net GST payable. Now, RCM also you have to pay it in cash. So RCM also you have to add to that. Then you will get the net GST liability. I hope you got the point. I hope everyone are following. Okay. So therefore, here what do you do? Net GST payable. First, work out the GST liability on forward charge. Very simple. Taxable goods is 50 lakhs into 6%, 3 lakhs is the output charge. What is ITC? We worked out now only. The ITC which you can claim is you have to from 3,01,350, 3,01,350, you have to reduce the credit attributable to the exempt supply. So therefore, what you have to do in this case is you have to take 3,01,350 and reduce 4,600, which is 296,750. So how do you got this? This is basically nothing but what you have got here, 3,01,350 minus the common credit attributable to exempt. So this is 296,750 what you have got. So net GST payable will be 3,250 each. But apart from this, you also have to pay the GST liability on reverse charge mechanism. So on both you have to pay on reverse charge mechanism, on taxable goods and non-taxable goods. There is no exemption here on reverse charge. So 3,750, 1,250 you have to add. So reverse charge will be 5,000. Total GST liability is 8,250 each. Fine. I hope you understood this problem. Any queries? Please ask. Now we go to the next problem. 8.137 of your study material. Okay. Mr. Rajesh Surana has a proprietorship firm in the name of Surana and Sons in Jaipur. Firm registered under GST in the state of Rajasthan. Manufactures 3 taxable products M, N, and O. Tax on N is payable on reverse charge. Tax firm also provides taxable consultancy services. Turnover of M excluding export sales 14 lakhs, N is 6 lakhs, O excluding export sales is 10 lakhs. Export of M with the payment of IGST, not eligible to avail benefit of merchant exports is 2.5 lakhs. Export of O under letter of undertaking 10 lakhs. Consultancy services provided to unrelated clients located in foreign countries. In all cases, the consideration has been received in convertible foreign exchange. Then sale of building excluding stamp duty of 2.5 lakhs being 2% of value. Entire consideration is received post issuance of completion certificate. Building was occupied thereafter 1.2 crores. Interest received on investment in fixed deposits to bank 4 lakhs. Sale of shares purchase price is 2.54 crores. Sales is 2.5 crores. Legal services received from advocate in relation to product M is 3.5 lakhs. Common inputs used is 3 lakh 35 lakhs inputs, 15 lakhs as input services. With the help of the above mentioned information, compute net GST liability payable from the credit ledger or cash ledger. Fine. Rate of goods 12%, rate of services 18%, and also turnover he has given 85 lakhs in the preceding financial year. Please try to work out this problem. Yeah. Any answers? Covering lot of provisions, this particular problem. So if you see here, first question what is asking is the net GST liability. So how do you work out net GST liability? Total output service minus the input tax credit, as simple as that. Okay, so what are the information which is given with regard to that? You will have to work out. Any answers? So first thing, you have to work out the GST on outward taxable supply. So let us look at what is the outward taxable supply here. So first is turnover of M excluding export sales. Now M is a taxable product. So this 14 lakhs is excluding the export sales. Okay, 14 lakhs is excluding the export sales. So therefore, on this 14 lakhs, 12% is the rate. So on this GST rate will come. GST rate. GST at the rate of 12%. On this has to be worked out. Then turnover of N. Now N is payable under the reverse charge mechanism. Since N is payable under the reverse charge mechanism, on this their won't be any GST applicability. Why? Because you are selling the product and that other person is paying on the reverse charge directly to the government. So therefore, this basically on this there is no GST on forward charge. So output tax liability will be nil. Output tax liability will be nil on this one. Now, turnover of O excluding the export sales. Turnover of O excluding the export sales, this also is taxable product. Again, GST at the rate of 12% will be applicable on this. Then export of M with the payment of IGST. Don't get confused by this notification, merchant exports and all. The moment he says with payment of IGST, straight away GST is applicable. When it is without IGST, the next point will come under letter of undertaking. So if you are submitting a letter of undertaking, it is an online letter of LUT, it is called in short. If you file the LUT, that means you are authorized to make the zero rated supply. So on the top, if it says export of M with payment of IGST, that means on this straight away GST is applicable. So therefore, on this straight away on 2,50,000, IGST at the rate of 12% is applicable. Fine. Then export of O under a letter of undertaking. Export of O under a letter of undertaking. This will be here 10 lakhs. Export of O under a letter of undertaking 10 lakhs. This won't be subject to GST because it is a zero rated supply. Okay. It is a zero rated supply. No GST as it is a zero rated supply. Okay, then consultancy charges provided to unrelated clients located in foreign countries. In all the cases, the consideration has been received in foreign exchange. This also export of service where supplier is in India, recipient is outside India, place of supply is outside India, payment received in foreign exchange. In this particular situation, it is a zero rated supply. The moment it is a zero rated supply, there is no GST applicability on this. So on this also, no GST since it is a zero rated supply. So on this 20 lakhs also, there won't be any GST. Another next interesting point. Sale of building, he says. Now, can anyone tell me the sale of building 1.2 crores? He says entire consideration is received post issuance of completion certificate. I want to test your understanding. Is it exempt or taxable? Can anyone tell me the sale of building, whether it is exempt or taxable? So here if you see, post issuance of completion certificate, the entire consideration is received. It will come in schedule 3, where it is neither a supply of goods nor a supply of service. So therefore, in this particular situation, it will be an exempt supply. So therefore, sale of building, no turnover, same is not liable to GST. You cannot say it is an exempt service. It is not at all a supply of service also. Fine. Then next one, interest. 1 second. Interest received on investment in fixed deposit, same thing. 4 lakhs no GST applicability on this. Sale of shares also, there is neither goods nor services, no question of GST. So once you do all of this, you will get the GST on outward supply. So GST on outward supply, if we see, that is what this is exactly what we discussed. On this, you work out the taxes, zero rated, total output supply will come as 3,18,000. I hope you got the credit amount of the total GST paid on outward supply. Then after that, what we have to do? So now we have got only the GST paid on outward supply. We have to now calculate the input tax credit which goes to the credit ledger. And after we calculate the input tax credit, in the process of calculating the input tax credit, we should also calculate what is the common credit which is attributable. Okay, when you calculate the input tax credit, in that first common credit, whatever is there, we have to take that, and whatever common credit is attributable to exempt supplies, we'll have to reverse that. So first case, what we have to do is we have to work out the common credit which is attributable. So what are the credits which are there here? Let us look at the problem. Common inputs and input services for supply of goods and services mentioned above. Inputs is 35 lakhs and input services is 15 lakhs. So very clearly given, on goods the rate is 12%, on input services it is 18%. So 35 lakhs, the input is 12% and input services is 18%. Fine. So on 35 lakhs into 12% you have to take, and 15 lakhs into 18% we have to take into consideration. That is basically a common credit which is attributed for inputs and input services. Now, what is the common credit which you are attributable to exempt supply? This is where the important tricky part comes, where you have to calculate the total turnover and we have to calculate the exempt turnover also. Okay. So therefore, when it comes to working out of the common credit, okay, common credit on input and input services, if you see 35 lakhs into 12% and tax on input services 2,70,000, which is nothing but 15 lakhs into 18%, total is 6,90,000. Now, common credit attributable to exempt supply, this turnover calculation is important. Exempt turnover by total turnover calculation is important. So how do we get this calculation? If you see exempt supply, what all will come under exempt supply here? Okay, value of exempt supply in which if you look at the total one by one. So value of exempt supply we have to calculate and value of total supply if you have to calculate. Now let us go back to the problem. If you go to exempt supply, okay, exempt supply also includes the supply on which the tax is paid under the reverse charge. By virtue of definition, it also includes the tax on which the amount is paid by virtue of reverse charge. So therefore, this 6 lakhs will be taken as exempt supply, exempt turnover. Okay, this 6 lakhs will be taken as exempt turnover. Then when it comes to the sale of building, it's very clear. For the purpose of sale of building, the stamp duty value is to be taken. So if he says excluding stamp duty of 2.5 lakhs being 2% of the value. So 2,50,000 into 100 by 2. We have read clearly in case of building, the stamp duty value has to be taken into consideration. So exempt turnover is stamp duty value, which comes to 1.25 crores. So 6 lakhs plus 1 crore 25 lakhs, 6 lakhs plus 1 crore 25 lakhs. So that will come to 1 crore 31 lakhs. Then of course, this one we have to specifically exclude. It is clearly given. Interest received on fixed deposit for the purpose of calculating exempt supply, you have to exclude it. So this will not come. Then the next one, sale of shares, purchase price 2.4 crores, sale is 2.5 crores. For this also a guideline is given, 2.5 crores in case of sale of shares, always take the turnover at 1%. So therefore, exempt one is 1% of 2.44 crores, which is 40,000 rupees. I'm sorry, 1% of sales. So that is 2,50,000 rupees. Okay, so 6 lakhs plus 1.25 crores, 1.31 plus 2.5 is 1 crore 33 lakh 50,000. This is your exempt sum. I hope you got the clarity. Now, what is the total exempt turnover? Sorry, what is the total turnover? Total turnover will be nothing but this 1.31 crore 33 lakh 50,000 that will anyways be taken into consideration plus your taxable supply. Okay, what is the taxable supply? Go back to the problem again. 14 lakhs. So just take out your calculator. 1 crore 33 lakh 50,000 plus 14 lakhs plus 14 lakhs, then plus 10 lakhs, including zero rated also, plus 2 lakh 50,000. Okay, plus 2 lakh 50,000 plus 10 lakhs should include zero rated supply also. Okay, plus 10 lakhs we have to include. Then include 20 lakhs also, this consultancy services under letter of undertaking. So plus 20 lakhs, and so that you will come, if you add all the taxable one, you will get to the extent of 1 crore 94 lakhs. 1 crore 94 lakhs. Total turnover. 1 minute. Yeah, for total turnover, you have to take that interest also. For interest turnover, you have to take the total turnover. You have to take that 4 lakhs interest also. Then you will get the total amount as 1.94. 1.35 will come in 1.94. The total turnover, take that interest on FD also. 1 crore 94 lakhs. So 6,90,000 is common credit. You know the exempt turnover, you know the total turnover. Common credit attributable to credit is 4,74,820. Okay, 4,74,820 is the common credit attributable to the exempt supply. So how do you work out the credit here? Again, so now where are we now? We have first worked out the gross output tax liability, and you worked out the common credit attributable to exempt supply. Now you have to work out the credit which is available in the electronic credit ledger. So you know 6,90,000 is the common credit. Okay, on this legal services used in manufacture of taxable product M. Legal services you are supposed to pay under the reverse charge mechanism because subject to RCM, but you can claim the credit also because it is in relation to the taxable product, he says clearly in the question. So on this 63,000 you will have to calculate. How did you get 63,000? Again, go to the question. 3,50,000 on services. 3,50,000 into 18%. Okay, 3,50,000 into 80%. 18%. This is how you got the RCM credit. 63,000. Total is credit ledger is 7,53,000. How much attributable to exempt supply? 474,820. So remove this ITC available. You have already got 278,180. So you know the ITC available. You know the outward supply. Now we will work out the next net GST liability. First, we already worked out this is 3,18,000. This one we have already worked out, it is 278,180. And GST paid on cash ledger also he is asking. He's asking how much you will pay from the cash ledger and how much you will pay from the credit ledger. So in this particular situation, cash ledger in total GST payable is 102,820. Legal services RCM you have to pay in the cash ledger only. You pay in the cash ledger and then take the credit. Then you will the balance you will pay from the respective cash ledger 39,820. Okay, so total GST payable is 1,02,820. I hope you understood this problem in detail. Any questions here? Anywhere you're getting stuck, let me know. So both the 63 and 39 all put together, this is from cash ledger, the balance. This the credit you have claimed, no problem, but still you have to pay through the cash ledger. Total GST payable is 102,820. Now we go to the next question. Problem number 21 of your study material, 8.138. Problem number 21. This is the fairly simple, I won't say simple, but the provisions you should be able to recollect easily. Let us check. Messrs XYZ, a registered supplier, supplies the following goods or services for construction of buildings and complexes: excavators for required period at a per hour rate, manpower for operation of excavators at a per day rate, soil testing and seismic evaluation at per sample rate. Excavators are invariably hired out with the operators. Again, mixed composite supply concept will come here. Similarly, excavator operators are supplied only when the excavator is hired out. XYZ receives the following services: maintenance services for excavators, health insurance for operators of excavators, scientific and technical consultancy for soil testing and seismic evaluation. Receipts he has given: hire charges 18 lakhs, services charges 20,000, soil testing 2.5 lakhs, GST paid also he has given, maintenance 1 lakh, health insurance 11,000, scientific technical consultancy 1 lakh. Compute the net GST payable. He has given hiring out rate 12%, supply of manpower services 18%. Ignore the CGST, SGST or IGST. So work out the output tax liability and reduce the input tax credit for this problem. Please try to answer this. Value of sale of building is very simple. Let me just see where we covered that. 1 second. Here, rule number 43, explanation. This is where it has come, this rule. Okay, for determining the value of exempt supply as given in subsection 3 of section 17, value of land and building shall be same as adopted for payment of stamp duty. Understood? So 2% stamp duty we have got. He has given 2.5 lakhs or whatever was there in the problem. That into 100 by 2 is your value of the land and building for the purpose of determining the exempt sum. This explanation was covered in that problem. I hope you got the concept now. Then value of security shall be taken as 1% of the sale of such security. So how much ever gross securities you have sold, on that 1% you will take in the nature of exempt sum. Okay, is that clear, Sriram? If it is clear, let me know. Otherwise, I'll explain again. Explanation to rule 43 was the concept which was covered in the problem. Okay, so here he is asking us the net GST payable. Again, similar approach. Don't get a bit panicky if you see the questions. The big questions will be there and all of that. Very simple. If he's asking net GST payable, work out output tax, work out input tax credit, net GST payable is the answer. In these cases, if any one item, if you make a mistake, don't worry, you will get marks per item. If you have taken one correct amount in outward tax liability, for that specific marks will be allocated. But let's not venture into that. You have to make sure that you are giving the correct answer. Okay, so what is the gross GST liability? Let us first look at the gross GST liability. Again here. Higher charges for excavators, 18 lakhs. Fine. So 18 lakhs higher charges for excavators. He says clearly hiring out of excavators is 12%. So the principal supply here is hiring out the excavators. In addition to hiring of the excavators, if he is giving the manpower, it is comes under the composite supply. So that manpower also will be subject to the same rate. So manpower 20,000 also will be subject to 12% GST rate. So hiring charges 18 lakhs will have to be taken. On this 12% will come gross GST liability. On manpower 20,000 also 12% will come. On soil testing and seismic evaluation at the three sites, on this the rate of GST is 18%. On this 18% will come because this is an independent supply altogether. Fine. So this is your gross GST liability. I hope you understood how to work out the gross GST liability. After we come to the gross GST liability, we will work out the ITC credit which is available. So GST paid on the said amount. Maintenance for excavators 1 lakh. Straight away you can claim, there is no reason for disallowing. Health insurance for excavator operators. Now here health insurance, it is not mentioning whether it is obligatory or not. So let us assume it, usually it is not obligatory only. So therefore, assuming that it is not obligatory for the employer to provide that health insurance, mention that assumption in the problem, say that it is disallowed. Then scientific and technical consultancy GST paid is 1 lakh. Another very, very tricky thing here. See, the GST paid, this wording is very important. This is the difference between a CA exam and a non-CA exam. In a CA exam, if you forget to look at this GST paid, he says you forget to look at the GST paid. You just say paid, you forget to read the word GST here. Paid during the said month, maintenance 1 lakh, health insurance 11 lakhs, GST rate also he has given. You will do 18% of this 1 lakh and 12% of this 11,000, and you'll end up making a mistake. Reading the problem is very, very important. I cannot stress on enough on the importance of reading the question. So make sure this is the GST paid mark. So the straight entire amount will be taken as the input tax credit. Fine. So gross GST liability, very simple, 18 lakhs into 12%, 2,16,000. Service charges 20,000, 12,000, 2,400. Service charges for soil testing, seismic 45,000. Gross GST liability is 2,63,400. And ITC here will be 2 lakh rupees. What we have taken here, no need of CGST, GST, IGST is perfect. Net GST payable is 63,400. Very simple problem. I hope you understood the same. Now, next problem. Again, this is problem number 22 of the study material. Immediately after this problem, you can spot this problem of this V Supply Limited. V Supply is a registered manufacturer of auto parts in Kolkata, Bengal. The company has a manufacturing facility under the Factories Act in Kolkata. It procures inputs indigenously for registered and unregistered suppliers located within West Bengal, outside West Bengal also imports from China. Company reports the following details. Sales 15 lakhs, raw material 3.5 lakhs, consumables 1.25 lakhs, transportation charges for getting raw material to factory 0.7, salary paid to employee on rolls 5 lakhs, premium paid on life insurance policies taken for specified employees 1.6 lakhs, audit fees 50,000 or 0.5 lakhs, telephone expenses 0.3, bank charges 0.2. All amount are exclusive of taxes. Taxes also have been paid by the company. These are the additional details. Very big problem. Go through it very carefully. Additional details are given. Raw material worth 0.8 lakh is procured from Bihar and 1.5 lakh is procured from China. Customs duty of 0.15, social welfare charges of 0.015, and integrated tax of 0.2997 lakh are paid on the imported raw material. Confusing. Telephone expenses pertaining to bills for landline and for mobile phones, telecom service registered West Bengal. Bank charges is towards company's current account. Breakup of sales also given. Sales in West Bengal 7 lakhs, States other than West Bengal 3 lakhs, exports under LUT 5 lakhs. The opening balance of ITC is 0.15 lakhs, CGST, SGST 0.08, IGST 0.08. Exhaustive problem. ITC available with V supply, net GST payable for V supply. You require make assumptions wherever necessary. Okay. So how do you have to work out the problem? Same method always. First look at the what is he asking here in this case? He's asking the audio and video stop. Am I audible? Can anyone confirm? Because Viraj says that my audio and video is stopped. If anyone confirms, then I'll continue. Audio video started, Viraj. Okay, very good. It's fine. It's fine, Ashok. It's fine. We'll continue. Yeah. So what all is asking here? He is asking the total ITC first question and net GST payable. So how do you work out the total ITC? Look at all the expenses one by one. Okay. Look at all the expenses one by one here. One moment. Yeah. Yeah. So look at all the expenses. Now, if he is given in that lakhs, 0.1 lakhs and all, you also stick to the same. Don't try to convert and all. It will become very complicated. Okay. Now, where first, how do you calculate the ITC on total expenses? Now, whether any balance is mentioned, here the balance is, there will be opening balance. Point number 9. Underline this. CGST 0.15, SGST 0.08, IGST 0.09. Opening balance of these three will be clearly given. Right, opening balance of ITC in this case will be 0.15 means 15,000. You can either convert it or take it as it is. It is your wish, because in some cases here sales 7 lakhs like that is. So opening balance 15,000, 8,000, 9,000 you take. That is number one. Then you look at each expense. Now we'll come to the expense. Raw material. He is telling 3.5 lakhs. Okay. If you go to the comments section, he says 0.8 lakhs. Is procured from Bihar. So 0.8 lakhs if is procured from Bihar, on that it will be IGST. Okay, on that it will be IGST. Raw materials procured from Bihar, on that IGST will be applicable. Fine. So that is clear. So raw materials procured from Bihar you will take. Then raw material imported from 1.5 imported from China. In this, IGST credit is available. IGST credit 0.2997 is available. IGST credit 0.2997, which is nothing but 29,970. That is available. Okay. Remaining raw material is procured from suppliers located in West Bengal. Okay. Then raw material, out of such raw material. So total, so first what you have to do, work out the raw material part. 3,50,000 is the raw material. Out of this, 80,000 is purchased in Bihar. Then 1.5 lakhs is purchased from, imported from China. So you are left with 1.2 lakhs. Okay, 1.2 lakhs. Remaining raw material is procured from suppliers located in West Bengal. Out of such raw material worth 0.3 lakhs is procured from unregistered suppliers. So immediately in our working, unregistered suppliers you take, on that no ITC will come. Just write that. Then also he is telling this raw material 0.05 what you purchase from registered supplier is destroyed. So this also ITC will not come because it is 17 subsection 5. So we have to work out what is the remaining raw material which is left out, which is purchased from raw material, which is purchased from West Bengal. So what is the total raw material? It is 3,50,000. From 3,50,000, what all you have to remove? First one, you will remove 1,50,000, which is imported from China. Okay, you'll remove 1,50,000 imported from China. Then you'll remove 80,000 which you have procured from Bihar. 80,000 which you have procured from Bihar. Then important point where you'll get uh, confused here. He's telling 1.5 lakhs is imported from China. The problem is silent. Whether this customs duty is included in this 1.5 or the social welfare charges is including in the 1.5. So we have to make an assumption. We have to make an assumption that it is included because that also comes in the cost of the asset. So 1.2 lakhs of raw material is remaining still. Out of that 1.2 lakhs, what is he telling? 30,000 is purchased from unregistered suppliers. So that you remove. 90,000 will be left out. On the 90,000, you have to again reduce 5,000, which is purchased from registered supplier, destroyed, no ITC on that, 5,000 you remove. So therefore, 85,000, okay, 85,000 is basically purchased others in West Bengal only. On that CGST, SGST will be applicable. On that CGST, SGST will be applicable. Fine. So therefore, what is very clear, what you have to remember is first to take the raw material. This raw material is 3.5 lakhs. Out of this, what all you will remove? Bihar you will remove, China you will remove, unregistered you will remove, and you will remove the destroyed one. Okay, understood? These four if you remove, you will get the balance. You will get the balance. Fine. So that was your raw material related inputs. Then once you complete the raw materials, we come to consumables. That is the second part of the question. So if you go to consumables, 1,25,000 is mentioned. From 1,25,000, in this diesel 25,000 is there. So remove diesel 25,000. Okay, remove diesel 25,000. So it will be 1 lakh, straight away 9%, CGST, SGST. Because he says registered in Kolkata only, CGST, SGST will be applicable. So consumables is done. Then we come to transportation charges for bringing the raw material into the factory, which is 60,000 paid to GTA and 10,000 paid to horse pulled carts. Now, motor vehicle is horse pulled carts is clearly exempt. Okay, horse pulled carts is clearly exempt. Only this GTA will be applicable. 60,000. This is reverse charge mechanism. Reverse charge mechanism you can still claim as ITC in 60,000 into 5%, 1,500. Since it is Calcutta, CGST, SGST will come. Then what is the next one? Salary paid, no GST. Very simple. Okay, life insurance paid technically for specified purposes. Now this is for obligatory. Since it is obligatory, this can be claimed as ITC. Audit fees, 0.5 lakhs. Any comment is given for audit fee is paid for the audit fee. This also can be claimed as ITC. This also can be claimed. And bank charges also can be claimed. So therefore, these are all the ITC which you are supposed to claim. So therefore, the ITC opening balance is there. Raw material from Bihar, this IGST will come because it is from outside the state. Raw material from China, only IGST will come. Customs, etc. will not come. Then raw material from China, this is done. Unregistered, nothing will come. Destruction, nothing will come because blocked. Raw material, 7650, I told you 85,000 is the balance. I hope you understood how that 85,000 calculation came. If not, you let me know. Sir, IGST 29,970 is 18%. So taxable value is 29,970, 166 points. This total cost, basic custom duty shows you how hence it can be said custom duty is exclusive of cost. Yes, definitely it is exclusive of cost. Correct. So this point we have to remember. Sometimes you may get confused that cost may, even that custom duty is applicable. So therefore, don't get confused that customs duty should not be taken into consideration, right? So this is your ITC available. Once you go to the ITC available, next one is go to what is the net GST which is payable. Net GST payable. So you have to again work out the GST sales. If you go to the problem, what is the sales which is given in the problem? Sales is 15 lakhs. But in that also, he has given multiple comments. Sales in West Bengal is 7 lakhs. Okay. Sales in West Bengal is 7 lakhs. So on that, 18% is 1,26,000 divided by 2, CGST 63, SGST 63. Very simple, because intrastate supply. Other than West Bengal, 3 lakhs into IGST 18%, that will be 54,000. Okay, so on this IGST will be 54,000. On this CGST 63,000 and SGST will be 63,000. Okay, export under any LUT, whether there will be any tax, nothing doing. There is no question of any tax on this thing. So there you will get the total output tax liability. Okay, the total output tax liability here you will get. You know the ITC which is being available for set off. Now method of set off is important here. Method of set off is important. IGST credit is how much? 53,370. So IGST credit first utilize against IGST. So totally utilized. After that come to CGST 55,650, utilize only against CGST, cannot utilize against SGST. Therefore net GST payable is 7,350. SGST credit only utilize against SGST. 14,350 is the net GST which is payable. And so 1 minute. Yeah, and then you add the reverse charge mechanism, what has to be taken into consideration here. So then here what is happening, if you see, if you go to the question here, this ITC is available, which is being set off. This 53,370 is totally being set off against IGST payable. So net IGST payable is 630, and these two are also covered here. Don't forget this reverse charge mechanism. Okay, always what happens, most of the times we tend to forget this. Make sure you don't forget that, because you have to add that in the cash ledger. So this is how is the final GST payable on the cash ledger. Fine. I hope this problem is clear. Okay, fairly big problem, perfect examination problem. This is how the examination problem will be given. Okay, now next problem. This also is the study material, 23rd problem, immediately after this one. 23rd problem. Okay, this is basically a fairly simple problem compared to what we have done till now. ABC Limited of Bangalore, manufacturer and registered supplier of machineries. It provides the following details: health insurance, okay, of factory employees as required under the Factories Act 20,000. Raw materials for which invoice is received, GST also has been paid, but only 50% material received, remaining 50% received next month, 18,000. Again, GST paid is given here. Don't forget to not read all of this. You have to read it very clearly. Works contract service for installation of plant and machinery, 12,000. Purchase of manufacturing machines sent directly to job workers' premises and delivery charge on 50,000. Purchase of car used by director exclusively for purpose of business meetings, 25,000. Outdoor catering service, 88,000. ABC also provides service of hiring machines along with the manpower. As per trade practice, machines are always hired along with operators. Same composite supply, this thing has been given. Hiring receipts 5.25 lakhs. Service charges 2,35,000. Assume the rate of GST. Also compute the ITC which is available. Compute ITC available, which is there in this particular series. And also net GST payable. Both is asking. Okay. So what is the ITC which is available? One by one, you have to see the points here. For that big problem, easily it will come around 8 to 10 marks. So here, health insurance as required under the Factories Act is telling. So since it is obligatory, it can be claimed. So this can be claimed as ITC. Raw materials on which invoice is issued, 50% only has come, other 50% has not come. Please bear in mind, don't get confused. ITC can be claimed only on receipt of the entire lots. Don't think 18,000 is there, you receive 50% means you can claim 9,000. You cannot claim anything. Cannot be claimed. You can claim only on receipt of the entire lots of the raw material. Works contract service for installation of plant and machinery, buildings other than plant and machinery only you cannot claim, but for plant and machinery you can definitely claim. Purchase of manufacturing machine directly sent to job workers premises, definitely you can claim, because just because it is directly sent, it doesn't mean that you cannot claim the credit. Car, impossible, cannot be claimed, totally blocked. It doesn't matter for what purpose is doing. Outdoor catering service also unconditionally blocked. No question of claiming. No question of claim. Fine. I hope it is clear for everyone. So therefore, total GST credit is 82,000. Net GST payable, very simple. I hope you can do it now. Only confusion here, this composite supply rate will be the same. No CGST, SGST bifurcation is given. Total GST liability is 9,200. Fine. I hope this is clear. Now we go to the next problem. Again, immediately after that problem, it is there in the material. Pari Limited of Jodhpur is a registered manufacturer of cosmetic products. All this last question, everyone are answering. That last question is simple. You are able to track everything, but the one before that, which has all the concept, that you should be able to answer. That when you will be able to answer only if you have revised all the topics after the classes have completed. Fine. The problem solving sessions will have even more complicated problems. Exhaustive coverage is there in the Board of Studies live coaching classes. Exhaustive coverage. Everything A to Z is covered. If you attend these classes properly, revise it properly, able to understand the problem, there is no reason you will get anything less than 70 marks, 70, 75 marks in your indirect tax laws exam. Okay. Please focus, attend. Don't waste your time in reading this material, that material. Study material is the most important thing, along with supplementary paper can be more than sufficient. Okay. Pari Limited of Jodhpur, Rajasthan, registered manufacturer of cosmetic products, furnish the following details. Outward supplies in Rajasthan 8.75, state other than Rajasthan 3.75, export under LUT 6.25, expenses raw materials purchased from registered suppliers in Rajasthan 1,06,250, raw materials from unregistered supplier 37,500, from Punjab registered supplier 1 lakh, integrated tax paid on raw materials imported from USA 22,732, consumables purchased from registered suppliers in Rajasthan, including high-speed diesel 3150, 156, 250, monthly rent for factory building, salary paid to employees on rolls, okay, premium paid on life insurance policies to fulfill a statutory obligation, opening balance of ITC as given. Again, very exhaustive problem. This you have to try to do it now because you have worked out enough number of problems. Compute ITC payable, net GST payable. Compute the ITC payable and net GST payable. So how you have to work out again? Let us go one by one. We are asking input first. So let us look at raw materials from registered dealers located in Rajasthan. 1,06,250 into 9% each. 18% is given, no? The rate of GST. Yeah, 18%. So 9% each. So therefore, this CGST and SGST can be claimed. Then from unregistered suppliers, nothing. Nil. Then Punjab means IGST will come. So 18,000. Simple. Step by step you should see. Don't get scared by the size of the problem. Very easy. Then IGST on import of USA can be claimed definitely. Okay. Then consumables purchased high-speed diesel 156 250 from this high-speed diesel also included. Of course, since that is non-GST, you have to remove it. So if you remove 31 250 from 156 250, you will get 1 lakh. How much does it come in? 1,25,250 into 9%. Okay. So minus 1,25,250 into 9%, you can claim 9% each because it is again from the same state only. Okay. Monthly rent to the factory, again 18%. You can claim CGST, SGST. Salaries, nothing will come. Premium paid on life insurance, since it is obligatory, you can claim 18,000, 18% GST. Fine. So very, very simple. Don't forget to add the opening balance. Opening balance of ITC is given. You please add that also. You'll get the total eligible input tax credit. Okay. Then net GST payable. Immediately look at the sales. 8,75,000. 8,75,000 into 9%, 9%. 78 cent 50, 750 cent. Then interest rate supply. 3,75,000 into 18%, 67,500. Exports under LUT will be nothing. You know the input tax credit. I'm sure by now you know the set off. First set off the IGST against IGST. Then CGST against the CGST, you set off SGST against SGST. Close. Net GST payable. Size will be big, but if you look at it item by item and know the concept, it is simple. Okay. Next one. Yeah, this is the last problem of the class and of the chapter. Let's go through it. Flochem Palanpur has entered into a factory contract with our refinery, Abu Road, Rajasthan, on 1st July to supply 10 valves on FOR basis. Following information is given. List price per valve is 1 lakh. One of the conditions is Flochem should ensure a two-stage third-party inspection. Cost of inspection is 15,000. This value of supply is tested here. Okay, you need to know what all you have to add in the supply. Cost of inspection 15,000 directly paid by our refinery testing agency. Special packing required. Cost of special packing 10,000. Flowchem arranges for erection and testing of valves. Please listen to this problem only if you have value of supply related. If you have completed the revision, listen. Otherwise, you'll get confused. Okay. I don't know why it has come in the ITC. Next ITC is given in the next section of the call. So he tests pretty much everything in each. So you can't separately identify the problems of input tax credit. That's why you'll see even in input tax credit chapter, you'll have problems where concept of value of supply is tested. Okay. Then Flowchem arranges for erection and testing of the valve supplied by it. Cost of erection is 15,000 for 10 valves. 15,000 for 10 valves. Goods are dispatched with tax invoice on 20th July and they reach the destination at Abu Road on 21st July. Lorry freight has been paid by our refinery directly to the lorry driver. Okay. Assume CGST, SGST 9%, IGST 18%. Opening balance is IGST nil, CGST 20,000, SGST 20,000. All given amounts are there. Then local transactions he has given. Availed services of works contractor. CGST, SGST laid pipelines up to the gate of the factory for purpose of mobile communication, telecommunication tower installed. He has entered into agreement with travel company to provide home travel facility. He has entered into agreement fitness center to provide the wellness. So work out the net GST which is payable from the electronic cash ledger. So first again you have net GST payable whenever he mentions. First work out the output tax and work out the ITC. Okay. Post that you'll get the net GST payable. So what is the output tax liability here? Here, list price per valve. So how do you work out the total value of taxable supply first? 1 lakh you take into consideration into again 10 valves he says. So 10 into 1 lakh is 10 lakhs. Then amount paid here, this one. Cost of inspection 15,000 paid by our refinery to testing agency. That means any amount which is charged for anything done by the supplier, for anything done in respect of the supply. In this case, for inspection also, liability of the supplier, it will be included in the value of supply only, because liability of the supplier, but in recipient is undertaken on behalf of it. That also will be added. So 15,000 will be added. Special packing also will be added as per section 15. Then erection and testing at site, 15,000, that also will be added. Freight note 3. So 5,000, this also will be added. Then, and after that, what else will be added here in this one? If you see, value of taxable supply will come at 10,45,000. 10,45,000 is the value of total taxable supply here. 18% IGST. Very simple. Gross output tax liability is very simple here, the way you have worked out. Now you come to the net GST payable, for which you have to work out the total input tax credit which is available. If you look at the input tax credit which is available, he has given also opening balance. Then one by one, we have to see whether it is eligible or not. First one, works contract service for fixing the machinery to earth. Foundation or affixing means straight away it is plant and machinery. Then in this particular situation, it will be allowed. So this will be allowed. Then laid pipelines up to the gate of the factory for purpose of production facility. Now, is this plant and machinery? Definitely not. It is clearly excluded. So therefore, this is used for construction of immovable property on his own account. So therefore, this will be blocked. Mobile communication towers, telecommunication tower also is not plant and machinery. So therefore, this also is blocked. Okay. Home travel facility also, unless obligatory, not allowed, blocked. Wellness, totally blocked. It is not obligatory, so totally blocked. Okay. So ITC of only this 5,000 will be allowed. Opening balance is there 20,000 CGST. Total balance is 25,000. Fine. You know the output tax liability IGST now. You first set off the CGST, then SGST, net IGST payable is 1,38,100. So with this, we come to the end of our discussion with regard to input tax credit. I hope all of you have derived the value from the sessions what has been conducted by us. 4 exhaustive sessions completing of multiple problems, close to around 20 to 25 problems we have worked out, pretty much exhaustively covered. This is not like a crash course or a revision course. This is exhaustive coverage of the syllabus. Okay. So mainly the persons who will benefit from this are who are attending for the first time. Okay, revision, people who are doing the revision may feel that classes are going a bit slow, but if you are attending for the first session, it is very exhaustively done. Thanks to the Board of Studies for giving the opportunity to educate all of you with regard to these particular topics. As of now, I have taken the classes now for totally 6 to 7 batches have been completed successfully. I'm glad to be associated with the CA Institute and my parent institute, which has given me the valuable degree and given me the source of livelihood. And it gives me great pleasure to address all of you with regard to all the sessions what has been taken by me. So post this, I'll please stay in touch. You can please note down my email ID. It is I'll just share the screen. If anything, please feel free to send an email. Over mobile, I may not be able to access each number of things. Let me just open our document, and I will just mention it there. And so anything, please don't get stuck anywhere. If you're having any queries anywhere, please feel free to email. Okay, so that I'll be able to solve your problem. Okay, so therefore you can just have a note down at it. This is my email ID. Okay, if you have any queries, please send it here in the topics, and hopefully I'll be allotted more sessions for the problem solving sessions. In that case, we will meet again. Until then, please take care, study well, and make sure that your preparation is not hampered. Thank you very much for your kind words, Sriram. I try to make it as much lively, even though I'm not able to see all of you. If I'm able to see all of you, definitely it will be more, because I'll be able to see the expressions, whether you're understanding or not. Still, thank you very much for your comments. And so therefore, all the best, my dear students. Thank you very much. Good night. Oh, I should zoom it. 1 minute. I'll just increase the font, and you can just let me know if you're able to see it now. Just take my email ID and just make sure you send your queries. Don't have that doubt or anywhere when you're revising the topic, because some doubts when you're doing the sessions, when you're listening to the sessions, you may not get, but later when you're practicing the problems, etc., you may get it. So therefore, please feel free to email me whenever you want. Thank you very much. Good night, my dear students, and see you soon, hopefully in the near future. And if for persons who are writing in, I don't know if anyone who write, I don't think anyone writing in May are attending these sessions. If anyone is there, wish you all the best for your exams. And I'm sure all of you are writing in the month of November. I hope to see you all as full-fledged chartered accountants by January mid 2024. That is nothing but the results time. Okay. Thank you very much. Good night.